All right. Hello, everybody. Welcome back to another episode of The Market Close. For the third day in a row, we are early. I see all the comments right here saying it's time to go early. Well, we're here early. We're here early because, well, I mean, I'm getting a pedicure today and a manicure. You know what? I'm getting two of them. I'm getting a I can't even talk. A medi-pani, and I'm getting it again right after I get it. That's how good today is. And I'm getting some damn Saratoga water on the way back from the mani and the pedi. Folks, I don't think we've seen a day like today in a very long time. The S&P 500 is up 8% here right now. It's up 8%. It's up 8 freaking percent in a day. In one day, 8.09%. Trump is speaking right now. We're going to switch live to him in a second and just hear what he's saying about tariffs. For those that don't know what's going on, we got a delay on the tariffs. 90 days except China. I have never seen the S&P 500 up 8% in a day, I think in the past 4 years. I don't think we've seen an 8% day on the S&P. Granted, the S&P got sold off aggressively, so you would imagine if there's any rebound based on a fundamental narrative changing, this fundamental narrative being about tariffs that is fundamentally changed, we would get a rebound. In fact, this morning, it was kind of like, all right, if we really do get some deals, some negotiation, maybe the China stuff cools off, we could see 550 again pretty easily just because of how sold off we were. We don't have any updates on China outside of the fact that we are now tariffing them 125%, which is a whole nother thing to deal with. But Trump did announce a 90-day pause on every other country instead of China, which is exactly what the market wanted. Palantir up 18%. Robinhood 22%. I have a covered call for $42 for Friday, so that one is now under pressure. But I mean, this is just incredible. Micron 17%, SMCI 13%, Intel 16%, ASML 13%, Nvidia 16%. My 110 covered calls for Friday also are under pressure on that one, but like, it's green. It's real. Tesla's up 20 freaking percent in the past hour. SoFi is up 19%. Apple is up 10%. Celsius up 10%. Rivian up 8%. All of this based on the narrative that is now fundamentally changed, which is that we don't have tariffs anymore across the world. We have them on China. Now, technically, we do have tariffs across the world. We have a 10% reciprocal tariff. That's like a flat tariff, which is exactly what the market wanted. Like literally, that's like the reason we were pumping that day on April 2nd is because the markets only cared about like what they priced in, 10 or 20%. Now Trump has confirmed right here 10%. And that is why we are seeing this momentum. So here's the tweet that set the world on fire today. Based on the lack of respect that China has shown to the world's markets, I am hereby raising the tariff charged to China by the United States of America to 125%. Effective immediately. At some point, hopefully in the near future, China will realize that these days of ripping off the USA and other countries is no longer unsustainable or acceptable. Conversely, and based on the fact that more than 75 countries have representatives of the United States, including the Departments of Commerce, Treasury, and the USTR, to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and substantially lowered reciprocal tariffs during this period to 10%, effective immediately. Thank you for your attention to this matter. And what's crazy about this is that in the morning, the biggest news today was that at around 8:30 a.m., Trump tweeted, "This is a great time to buy," with DJT. I mean, everything about this day is so crazy. We got a lot more coverage coming up. Trump is live right now. Let's switch to him, see what he's saying about all this, and then we will get a lot more coverage as we get through the entire market close. Thank you for everybody for being here. I've never seen anything like this ever, but it's happening. It is indeed happening right now. Here we go.
On trade, not only with, if you look at it, not only with China, but China was by far the biggest abuser in history, and others also. But somebody had to do it. They had to stop because it was not sustainable. Last year, China made $1 trillion off trade with the United States. That's not right. And now I've reversed it. It's for a short period of time, but we made $2 billion. We're making now $2 billion a day. And somebody had to do it. Roger actually said it. Charles Schwab was here a little while ago, one of the great financial people, and he said he's been waiting for 40 years for somebody to do what I did over the last month. And if you didn't do it, you wouldn't have a country. It wouldn't be sustainable. So I'm honored to have done it. And, look, nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. It's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal. And we have many other countries, as you know, many more than 75. And they all want to come, and they want to come here, or they'll go to Commerce, or they'll go to Treasury. We have our great senators here and congressmen. They'll call John, they'll do somebody, they'll go through somebody, but they're all calling, how do we do this? They all want to make a deal. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them, if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible. A man like Roger Penske, I don't want to get him in trouble with China, so I won't, but he would know that someday you have to cut the bow, and you have to do what you have to do, right, Roger? And that's what I did, and I'm very happy to have done it.
Mr. President, the Prime Minister of Greece just told Breitbart's Matt Boyle that he thinks absolutely the European Union and the United States could work out a trade deal that's win-win and, quote, mutually beneficial to both sides. What do you think about the Prime Minister's comments, and do you think a deal could be struck with the European Union?
First of all, I know him. He's a good man, and I appreciate his comments. Yeah, a deal could be made with every one of them. A deal's going to be made with China. A deal's going to be made with every one of them, and they'll be fair.
That's another reason the markets are getting momentum right now. I mean, this is not the same type of Trump we saw on April 2nd, which was very antagonistic. The countries are ripping us off, yada, yada. This is him saying, hey, we're going to get some deals done. And eventually we're going to get a deal done with China. Again, the headline right here, China reciprocated with 84% yesterday after the United States did 104% last night. Now the United States doing 125%. So, I mean, this is just the game of chicken. Each one's going to keep going higher than the other, but eventually they'll both capitulate. And it seems right here in Trump's tone that a deal will be done. And once the China deal is done, which maybe it takes a few months, maybe it takes a few weeks, then I think we can kind of get back to this bull market. We'll talk more about that. But every other country only having a 10% tariff, that's exactly what the market priced in on April 2nd. We rallied that day because that's what we got. Then we tanked because that's what we didn't get. And now we got it back again.
Fair deals. I just want fair. They will be fair deals for everybody, but they weren't fair to the United States. They were sucking us dry, and you can't do that. We have $36 trillion of debt for a reason. We don't have a debt for fun. They have it for a reason. And
all right, we'll get back to that in a bit. Trump pretty much said the main stuff we cared about, which was the tariffs and why he issued the delay. If you're just joining, the reason he issued the delay, in his opinion, look at the S&P up 8.5%. Is to give China the time to make a deal is one of the main reasons, or not to give China, but to give all these other countries that are negotiating the time to make a deal. That's why we're doing a 90-day pause on every country except China. And then he is optimistic that China will make a deal. Now, Trump also said during that video, I was watching the bond market, and he said, quote unquote, it's now beautiful. I don't know where he's getting that from, because bonds are rising like they should be if stocks are rising. Now, they're not rising aggressively. They're somewhat under control. They're pretty much where they were in the morning, 4.35% right here. It's not like at 4.5 or 4.6 or anything, but that's not beautiful per se. And maybe there's some other master plan going on in terms of how to get these yields down. But obviously, if stocks are rising, people are going to sell off their bonds to an extent to get into equities, because equities start to look really attractive if there's no massive tariff volatility anymore, and especially after this sell-off. And that's why we're seeing some of the momentum in the stock market currently right now. Oh, he was talking about the auction. That actually makes more sense. I didn't see the results from the auction. I'll pull those up in a bit. But if that auction went decently well, then even though yields aren't down, that could be a reason why he felt the bond market is working correctly. 10-year note auction came in at 4.4 versus 4.3. All right, that's not amazing. Obviously, that's not horrible, but that's also not amazing. So something will still have to be done about the yields that we have. But overall, baby, it's time to get a manicure and pedicure after the market closed, bro. It's time. I won't get the Saratoga water. I won't go crazy. I won't like act like I'm rich again. But the mani-pedi it's happening, dude. Have you seen my nails? It's disgusting. I've like literally been living this disgusting life with these nails because I couldn't afford it. We're back. We are back. All right. How much are you up today? Put it in the chat if you feel comfortable sharing. Right now, it is on my port 93,185. About 20 minutes ago, it was 125,000. That's when everything was like literally at the tippy top. We had a small decline since then. Even though we're actually hitting some of the, like Nvidia was at 111, now it's at 113. Robinhood was at close to 43, now it's back down to the low 42s. But it's a six-figure day for the port. And it's crazy because it was also a six-figure day to the downside last week. So, I mean, it is just a wild swing. Obviously, emotions have to be wild. As soon as the news came out, the amount of texts I got from family, from friends, I mean, my phone just started exploding with people saying, what the hell is happening? And then obviously they came to the conclusion that this is a market that you simply cannot easily trade, but it's also a market that you don't want to time. And I think the one thing that anyone should be proud of themselves for if you bought the dip in this market is that you didn't try to time it by getting cute and then trying to sell, and then get back in it. Like, it's not easy, right? If you did that in February, amazing. If you're doing that over the past 3 days, you have to really time it perfectly to get in and out. And it's just not easy. I would imagine a lot of people, as a result of just staying locked in to this market and buying any dip, are doing well. Yeah, we got Jonathan's up 180K, Bart's up 31K, Todd's up 15K, Vlad's up 45K, Demon King's up 67,000, John's up 550,000, Melanie's up 15%, Craig's up 43,000, Toby's up 20%. I mean, this is like, it's one of those days, bro. I know I say it over and over again, but like, these are the reasons, these are the days we invest. The last week, you just remember how excruciating it is to allocate capital and to deal with it falling on a massive level with the downturn that we saw. And I'm sure many people had six-figure down days, but it can all change in an instant. And the one thing about this rally that I also think is unique, look at Nvidia up 17.4%, just incredible. This one, and so here's my next question to everybody. I'll make a poll on this as well. Do you think this is a dead cat bounce? And I think this has some merits to not be a dead cat bounce, primarily because the last bounce that we had was based off nothing fundamental. That 200-day moving average that we captured, I mean, I don't even remember what the headline was that day when we captured the 200-day moving average. It was kind of just like, okay, cool. Enough of a sell-off. Let's pump from 540 to 572 back to normal. We can resume the bull market. And then obviously the volatility of April 2nd became horrible. And that became a easy dead cat bounce to look at in hindsight. But this one has a catalyst that is fundamental. The catalyst is that we're not putting any damn tariffs on the world outside of China, which the market can deal with. The market can deal with China and us being in a spat with each other. We've dealt with that in 2018. But the overall inflation from tariffs on headline CPI, which, by the way, we get that tomorrow, that's not going to be that bad because, again, we've slashed tariffs across the world to just 10%. The China tariffs will be inflationary, but those theoretically really could be transitory because those are not going to last forever. And if they do last, we'll have enough growth to outpace that. And so the narrative now for why I don't think, wow, S&P 9%, 541, my goodness, this is why it is hard to time the market. This is why it is hard. The narrative now is that earnings matters. In the morning, we talked about, or we saw some analysts talk about how earnings don't matter anymore. No, now earnings matter. The narrative in 2024 was low inflation, good job numbers, phenomenal earnings. We can do that again in 2025. We can do it again. We do not have to give up that dream. We can hold on to great job numbers, low inflation. Those aren't easy to maintain, but it is possible. Whereas 5 hours ago, it felt like that was out the window and it was impossible based on the fact that we would get into a recession from the tariffs. And then good earnings. We're not going to probably have phenomenal earnings like we did in 2024, but we're going to have decent earnings. And now companies can establish some guidance, right? Apple and Amazon's guidance is not going to be easy because they're heavy in China, but that's okay. That's not the entire market. There's a lot of other parts of the market that can figure out how to navigate everything going on, even if we don't have clarity on China. I don't think we've seen S&P up 9% since COVID. I really don't think since the 2020 ZERP-fueled era V-shaped recovery we had from the lows of March in 2020 that we've seen a 9% day. I mean, correct me if I'm wrong, but I really don't think we've had a 9% day on the S&P 500 in years. Robinhood right here up 20%, Palantir up 20% as well, SMCI up 14%, Intel up 16%, Nvidia up 17%. I'm not going to say this. There's no chance of this being a dead cat bounce, but this is not one of those rallies that is gone up and down and up and down. I mean, it like Trump announced the delay and all we did was go up. That's it. Because I think the market has pretty much realized we don't have to go back to 2022 levels on the S&P 500 if we have good jobs, lower inflation, and strong earnings. And that's what we're seeing right now. That is what we're seeing right now. I mean, S&P 500 for the month, I believe, is flat, if I'm not wrong. Yeah, it's almost flat. It's all, yeah, look at this. Well, for the past month, it's down 4%, but for the past week, it's basically flat. It's almost like nothing happened this week. But so much happened this week. And if you just looked at it, if you were living under a rock, you would have been like, oh, cool. S&P is down 0.75%. Nothing too crazy. Insane. Absolutely freaking insane. What did you guys say on the poll? 69% of you say this is not a dead cat bounce. I agree. I've agreed with you guys for the past couple of days as well, thinking it was, if it not a dead cat bounce, but it definitely wasn't something you could easily trust. This one, I'll go out there and I say you can trust it. I feel like you can trust this. And maybe I'll be wrong. I don't expect Robinhood and Nvidia and all these stocks to really hold these levels. Like if they give back 5, 6, 7, 8%, I don't think that's crazy, given they're bouncing, almost 20%. So I think that's normal. We got Friday coming up, long weekend. You might have people selling into it. Like that's fine. But the idea that the S&P needs to go back to 480, I don't think so. Now, granted, it is a 90-day pause. And because it's a pause, there will still be uncertainties after those 90 days. But what I think is happening is after these 90 days, there's going to be no more tariffs on other countries. If anything, it'll be 10% or it'll be all these new negotiated deals. But these 90 days are just to like say it's a 90-day pause, but it's done. It's an indefinite pause because we are going to lock in so many deals that we're not going to need to put on tariffs on them again. I believe that's how this is going to play out. And I also don't think I'm sipping the Kool-Aid here, dude. I've been pretty, I would say, bearish over the past couple of days. I could barely sleep over the weekend. I could barely sleep last night because the reality of what the tariffs represented started seeping in to how I was thinking about the stock market and the overall economy. And yeah, it was a bearish picture. If that narrative is gone because of a Trump tweet, then it is what it is. But if that narrative is no more a narrative, I think the better risk is that the narrative, the bigger risk is that narrative creeps in again, aka we don't lock in a lot of deals versus not trusting that. Like I think that there is a more harmful version of reality of just believing that the tariffs aren't real and that they're definitely going to go into place versus listening to whatever Trump said this morning, which is that, nope, we're done. We're not doing tariffs. Along with the fact that maybe Trump is not listening to Peter Navarro anymore. Maybe he's listening to Bessent. Here is a press conference that Bessent had with the media today, along with the White House press secretary. Trump wasn't here. Lutnick wasn't here. It was just Bessent. Maybe Bessent got what he wanted, and he got these tariffs to just be 10% across the board, except for China.
Better trade deals for the American worker. We have been overwhelmed with the amount of requests from countries around the world. I'll let the secretary speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The secretary here has been a huge part of the president's trade team, of course, and will continue to lead these negotiations moving forward to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125.
The S&P 500 is currently on pace for the 12th best day in its history. That is what we are on pace for. We got about 30 minutes until the market closes up about 8.5%. 12th best day in history if this can continue to hold on.
due to their insistence on escalation.
Secretary, thank you for doing this. Let me ask you three quick things, if I could, just for the sake of clarity, because the markets are open and they're wondering. First of all, Mexico and China, are they part of this 10% universal?
Well, China,
Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors. And what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems.
Goldman Sachs has taken away the recession call. Just now coming in, Goldman Sachs says, all right, we are taking away the recession call. Literally this morning, they put out a note. Literally, I can't make this up. In the morning, they said 2 hours ago, President Trump, tariff volatility, shifting our base case to recession. That was the headline in the morning. This is the headline I'm getting right now. Look at this. President Trump announces 90-day pause, reverting to our previous non-recession baseline. So the baseline went from a recession 3 hours ago, and then at 2:10 Eastern Standard Time, it went to, nope, no more recession. To be honest, bro, I know we can make fun of them here, but I get it. Like, I understand that if you thought the tariffs were going into effect, which, I mean, as a Goldman Sachs, as a JP Morgan, you have to assume whatever the president says is true, right? To an extent. So if you're assuming all that's true, you have to factor in those numbers, and those numbers come up with horrible multiples and likely a recession. And you probably have to warn your clients about that. S&P 500 right here up 9%. If that changes, which it did because of a tweet, then maybe we don't get a recession. Chef Mike Lee, thank you for the $10 super chat. Now it looks like the fake news 90-day pause was a test or part of a plan. Yes. So this is something that is crazy. Remember yesterday on the market open, we had that 90-day pause headline and markets rallied. We got the S&P from 480 to 520, or that was 2 days ago, I believe. That was 2 days ago. And then it turned out to be fake, right? That wasn't a real headline. Well, I mean, quite literally, Trump announced the 90-day pause. And I think for 1 second, if you think Besant wasn't looking at what the market did when they announced that fake 90-day pause, which, by the way, was a rumor that was spread by Goldman Sachs in their equity reports, and it just went viral on X and then CNBC, and then it caused the pump. But I think they saw that pump and they're like, oh, so we know exactly what the market wants. They want a delay and they want a flat tariff on the rest of the countries. We can give them that. And that's what they did. Now, Besant did say today, hey, we're not adjusting the tariff policy based on the market reaction. I would call a little bit of bullshit on that. Like, I definitely think they saw what was going on in the markets and they could not withstand another couple trillion of dollars being lost from equities, given everyone is talking about it. I mean, I'm looking at regular YouTube channels that don't even talk about the stock market. They talk about like politics and news, and their number one story every day is the decline in equities. So like, this is something that's becoming a cultural phenomenon. Obviously, Trump probably wanted some better PR here, and they caved. They haven't caved to China yet, but I think they definitely caved to the stock market. And as a result, we are seeing equities continue to gain some more momentum. Jose, thank you for the gifted 5 memberships. I think we have to get Jose on every time we have a 10% decline. Or maybe we should just have Jose on every single day, because it's oddly peculiar that Jose leaves for a month, doesn't do my show. Today he does it. Market's up 10%. I mean, if I had known Jose had that much power, I wouldn't have sold these damn covered calls on NVIDIA. So, one thing Trump did screw me on today is these covered calls. So I have covered calls at 42 on Hood, expiring Friday, and then NVIDIA at 110. Look, these situations happen. You kind of have to deal with it. I think on Hood, because, here's the thing. Obviously, I will be rolling those on Hood and NVIDIA. I don't know the strikes yet. We'll see tomorrow. I'm going to wait on Friday. Unless these stocks absolutely get away from me, then I'll probably roll it sooner. But I'm probably going to wait till Friday. I also think, this is a pretty big move. To see them move even further up from here, I would love it. But I also would be a bit skeptical that NVIDIA gets to 125 on Friday or that Hood gets to 50. Like, I think that's really aggressive. Could it happen? Sure. But if it doesn't, then I'll just be rolling those. In terms of hood, I still have all my options. I didn't sell any of them. And my options are like super out of the money, like $70, $95 strikes. So for a hood, because I'm really levered up with the options, that that unfortunately it is what it is. Got into them when hood was around 42, 43, kind of break even right now. Obviously, we had a big drawdown from there. But if we have a bull market that's going back on, yeah, I think the possibility for hood to get back into that 70, 80 range is very possible if we're in a bull market. And so from that perspective, I think the options offsets some of the covered calls as well, but I should be able to roll those. And then on NVIDIA, yeah, I think we're just going to monitor this week to week. I mean, now it's a question of, all right, are the lights finally green for NVIDIA to move forward? Like, is this still going to be hung up by different headlines around China and export controls every week? Or can they get back to being a company that is, one of the most undervalued companies in the world that turns into a company that's not as undervalued, aka the stock probably goes higher to match the reflections of where their PEG ratio is, where their PE is, etc. I hope so, and I think so. So as a result, I'll be rolling those calls. But look, it's a good problem to have. I mean, again, this is the cool thing about covered calls. Like, yes, sometimes you might get burned on them because you sell them right before there's a rip. It is what it is, but it's a good problem. Like at the end of the day, you can manage those. I'd much rather have the stock market be on pace for its 12th best day in history, which is what we're seeing currently right now. Also, this isn't a horrible day, I think, to sell covered calls too. I mean, if you waited till today and you got some NVIDIA, you got some hood, and you might want to sell some conservative, maybe $50 calls, $125 calls next week, 2 weeks out. I don't think it's a crazy thing either. I mean, look, like animal spirits are obviously very high currently right now, seeing all the green. Well, here's another question for everybody. Who's selling into this strength? Who's actually taking profits into the strength? Because for the past couple of days, a lot of people would have literally killed to be able to sell at these prices. I mean, are you taking advantage of that? Or are you kind of just saying, nope, it's a bull market and we're going to let it play out? Which I don't blame anyone for selling into it, but I also think like there is a fundamental reason to be excited about this catalyst of a 90-day pause. Yeah, pretty much all of you guys are saying no. All of you guys are saying no. Benny says, can you imagine if you sold yesterday? Yeah, yesterday seemed to be the bottom, theoretically, if this pause holds through. But even going back last week from April 3rd to April 8th, all 3 of those days were just really good days to buy, even though each one kept going lower and it was hard to deal with. But if this is the new normal and there's no more tariffs and S&P kind of creates a base at 530, 540, even 550, then it is just like, if you run a hedge fund and you look at NVIDIA, 114 up 18% right there, Robin at 42.20. If you sold hundreds of millions of dollars of equities over the past couple of days only to see this, I mean, that's tough. That's tough to see. But if you didn't try to time it, then you are doing some well. Bull market now for 90 days. Yeah. Look, my assumption on these 90 days is that they're going to be, these 90 days is going to turn into 90 years, right? I think the 90 days is arbitrary. I think they just needed to show their roughest hand in this poker game, get all these countries like Vietnam, India, South Korea that Trump talked about just now, getting so afraid. They got them to the deal table. Hopefully we actually get some real deals, and then these 90 days are over and we don't have to worry about this. And hopefully within 90 days, China is done as well, and we can move on. And we can get back to caring about earnings, which is the only thing that currently matters. Yeah, shout out to Kathy. I know a lot of people give Kathy shit, but she bought a good 300,000 shares of NVIDIA at 85, 95, around that range. So, I mean, she really took advantage of that dip. NVIDIA right here, 114, obviously getting a ton of momentum currently right now. Tom Lee was right. Yeah, and Tom Lee apologizing also, I think was pretty evident of the fact, and Dan Ives kind of freaking out over the past couple of days. I mean, they were in the right, in my opinion, for being scared, because if they have to believe the law of the land are these tariffs that Trump announced, you probably should be scared, because things aren't going to be pretty. I haven't seen any analysts come out and completely call BS on the tariffs. From all the analysts that I follow, whether it's Julian Emanuel, Tom Lee, Dan Ives, etc., no one came out and said he's not going to go through with this. All of them said, we really hope he doesn't go through with this. And I think that just, same thing with Bill Ackman, Ken Griffin, etc. I think it shows all of these people really believed, and I think a lot of us to an extent, that the tariffs would be official. And last night at 12:01, when the 104% became official, it was kind of a slap in the face of like, no, he's actually crazy enough to do it. But I mean, even BMO Capital, which is one, as you guys might know this guy, Brian Belensky, I believe is his name, 6,700. He was with Tom Lee in 2022 at the bottom of the bear market saying that we're going to have the next really big bullish run. This morning, he lowered his price target from 67 to 61 on the S&P. Yesterday, he was on CNBC basically arguing around the fact that he doesn't need to lower his target because he still thinks there's some momentum. This morning, he capitulates and is like, damn it, like I got to lower my target. I would imagine he comes out with a note tomorrow morning and says, all right, we're back to 6,700 or at least back above 6,100 because now you have a real fundamental narrative that is creating change in a lot of these price targets because the multiple on earnings probably matters a lot more than we thought it did. Even Ed Yardeni, let's hear from him right now on CNBC. He also lowered his price targets. Maybe this is going to get him to bring those targets back up.
When you president's attention, as Eamon just said, the president was watching what was going on in the bond market. I think we were about to have a credit event, and that's a sure way to create a recession. So everything kind of fits together. In the past, it was usually tight monetary policy that caused the credit event that caused the recession. This time around, it was tariff policy that was threatening a recession, and the bond market was anticipating a real crisis.
What now?
Well, I think that, we still have obviously a tariff issue, and it looks like there's a lot of confusion whether the 10% is negotiable or not. I mean, a 10% tariff, if it's not negotiable, is still about $300 billion. That's still a very big tax increase that'll probably mostly hit American companies and American consumers, and so that is an issue. But I raised my odds of stagflation recession scenario to 45%. I was thinking about taking it higher.
Glad you waited.
But I waited. I did think that the financial markets would have an influence on the president. I've been talking not only about the bond vigilantes, but the stock vigilantes. The silly notion that the rich own all the stocks, so it doesn't really matter if the stock market's down. It's ridiculous because there's a lot of people with 401ks. There's a lot of people that are involved in the market, even if it's small shares. It matters a great deal to them. I was hearing a lot of people that I went and got a haircut the other day, and everybody was talking about how much money they just lost last week. So
that was me yesterday at the barber. That was basically me.
I think that this is a positive development for the economy.
Did we get a bridge too far in terms of some of the damage that's already been done? Mm-hmm. And is that yet to show its face within this market? Certainly earnings remain the greatest unknown that we could talk about.
I think it could have been a lot more damage if it went on a few more weeks, a few more months. But I think the fact that it got nipped in the bud so quickly is important. And I think Brad made a very good point here. Is I was really dreading the idea of going into an earnings season and having managements have to say, we don't know what this is going to do to our business.
I was dreading that as well. I mean, as someone who covers, I would say, at least 100 earnings on the channel, to get into earnings season and realize that none of it really matters because there's all these tariffs and you can't blame Zucks or Nadella or any of these guys to be able to clearly explain what they think the trajectory of earnings will look like because they don't have enough time to kind of figure it out. But if the tariffs are gone, yeah, they have the time because now they don't have to worry about every country they do business in being tariffed to an oblivion. Outside of China, which I think, most countries already know that they have to, or most companies realize that they have to be able to navigate China. But this is incredible, dude. This is incredible. When's the last time the S&P 500 was up 9%? I'm trying to find that stat. If anyone knows, definitely put it in the chat. When is the last time we had a 9% move on the S&P? Like, that doesn't happen, dude. 9%, like, you can see individual stocks move up 9, 10, 15, 20%. The overall market, that is trillions and trillions of dollars that are flooding into the ecosystem from the sidelines, maybe from money market funds, maybe money that sold a couple days ago and is immediately chasing this rally. And I don't think the cat has to be dead here because there's a fundamental catalyst for why this rally is being chased. 2008, I feel like we had it during COVID. I feel like we definitely had a 9 or 10% day during COVID. 2009 or COVID probably were the last main times. I don't think in 2024 we had a single 9% day. I think the most we had in 2024 was like 5.5%, something like that. But I was there every day in 2024, and I don't remember seeing 9 to 10% on the S&P. We got 13 minutes left until the market closes. Look at Tessie, 20%, 268. The narrative on Tesla a couple days ago was this thing's definitely going under 200 if we have a crappy macro with a bad earnings. I mean, if we have a decent macro and a bad earnings, but earnings that can be overlooked because of FSD, robotics, yada, yada. I mean, I don't know if it has to go back below 200. Apple was at 168 yesterday, now 197. Celsius is up 8%, Enphase up 9%, Netflix up 7%, Google up 9%, Bitcoin 82.2. I mean, it's just an incredible day. Like, this is just unbelievable, bro. Okay, here's a question. Where were you when you saw the market flip? Where were you? Were you eating lunch? Were you outside? Were you at the store? Like, where were you when you saw the market flip? I was just on my phone, as always. Saw some green. I was like, Saw a lot more green. I was like, Saw a little bit more green. I almost started calling up my manicure pedicure lady, and I was like, hey, I need to book an appointment because, like, and now, we got 12 minutes left to confirm that this green is real as the market closes, and then we might end up making that appointment. But it was green, dude, and it was violently green. It was like, again, trillions of dollars switching to the upside type of green. A green that I haven't seen before. Staring at my screen and phone while doing my write-up. Nick said he was buying an engagement ring. Okay, that had to be pretty cool. If you were buying an engagement ring and then you saw that your net worth just went up substantially, that's not too bad. Congrats, Nick. She'll probably be very happy about this as well. Eating lunch, watching a lecture on Napoleon. Okay. In Brazil on vacation. That's not bad. I was in the gym, missed the flip, but still made the gains. I love it. Actually, I'll take the diamond. Yeah. No lab diamonds now. We can take the real diamond. Elizabeth says I'm up 6 figures today. Yeah, dude, it's crazy, right? And I know a lot of people were probably down 6 figures. I know I was over the past couple of days. And seeing that reverse in an instant, only the equity markets really have the power for that type of wealth to be transformed and changed within hours, minutes, seconds. But the psychology and the gut-wrenching pain of having to navigate it is obviously not easy. It is not easy at all. Warren, thank you for the super chat. Do you think this delay is a bull trap? So my answer here is no. I don't think this is a bull trap. I don't think it's a bull trap for one simple reason. I think if we're getting rid of tariffs outside of China, that is a fundamental catalyst. Debt cat bounces and bull traps, to me, the way I understand it, and I'm not a full expert on it, but the way I understand it, wow, S&P, it looks like it wants to go for 10%. My goodness, 9.65. The way I understand bull traps is that they are technical things that happen after a major sell-off to give people some excitement and momentum, but there's nothing fundamental to sustain the reversal, aka it's a trap for people to get bullish when you shouldn't be bullish because there's nothing fundamental. This is very fundamental. No more tariffs. I don't know what more we could want, right? Now let's get a good deal with China, then we can really get some fun. But if there's no more tariffs, that to me does not scream bull trap. And I would love to hear the counterpoint on this, but it really doesn't. And it's not just because that stocks are green. I mean, Palantir could be up 5% instead of 20%. The point is there's no more tariffs being leveraged the way that they were, at least for the next 90 days. And that, I think, is bullish. S&P 9.75, dude. It wants to go for 10%. It wants to go for 10%. Danny, thank you for the super chat. Funnily enough, I was in a work meeting with a project manager when the headline came in, and we were discussing how we would navigate tariffs. Changed the entire meeting. It's crazy, dude. That's crazy. That's absolutely crazy. Like, it has literally changed global commerce, global enterprise demand, like everything in the past couple minutes have been changed. And the craziest thing about it, again, Trump told us to buy. And it is like, I'm not a fan of it at all. I think this is insane using the power of the presidency to say this type of stuff. But at 8:37 this morning, he said, this is a great time to buy. 5 hours later, he pumps the entire market. Like, I don't know what to like. Just like, this is insane. This is absolutely freaking insane. It is just is crazy. I don't even know what adjective you want to use, but it is wild, dude. It is so wild. Grab as well, yeah. Grab, great day as well. If you bought that 340 dip, congrats. I mean, now again, the reversal here should be aggressive. Grab right here up 15% because the downside was so aggressive for no reason, in my opinion, as stocks really sold off. So it makes sense to get these gains. Hopefully we can maintain them over the coming weeks, but this is real momentum. S&P 0.5% away from a 10% day. When do you think we'll get to all-time highs? I mean, I don't know. I want to get a lot more research and due diligence on what the hell is happening right now in the market. Chris, I see you in the chat. I'm going to send you the StreamYard. We'll get you on after the bell, Chris, if you can make it. So like 4:05, if you're free, you can hop on StreamYard. We'll get your thoughts on this. But is all-time highs, are they possible this year? Yeah, I think they are now. All-time highs, what, 6,200? It's going to take a lot of earnings growth. And I'm not saying we have to get to all-time highs, but like, I definitely don't think we have to go back to 480 on the S&P. Last time we saw that number was January 2022. That's how aggressive this crash was. I don't think we have to get back there. The cruise lines, look at Carnival. That's up 18%. Royal Caribbean, that's up 17%. I mean, all of this is just absolutely insane in terms of how this is playing out. Okay, a lot of you guys are saying, ask Jason if the TA matters now. So I gave him some shit about that today. I gave him some shit about this because he texted me and he was like, oh, I knew this was going to happen. It was like, I called it this morning. I was like, dude, all right, whatever. I was like, really? The TA could have shown that Trump was going to announce that there's no more tariffs. And he was like, nope, I had my line. I had the trend line. I went long this morning. I was like, look, I'm happy you went long and you know how to trade. But I'm still of the belief that as much as TA matters, I don't think TA could have predicted a 90-day pause. Like it's just pure fundamentals. It's macro. It's random. Forget macro and fundamental. It's spontaneity, right? It just happens. Now, obviously, the new levels that we close on for the S&P and all these stocks, that's going to definitely affect technical analysis going forward. But it's hard for TA to predict this stuff, right? It's not a Jason thing. It's just TA in general. Who could have predicted that Trump would have a 90-day pause like 5 hours after he says it's a good time to buy? Like, it's just like this stuff is like just unbelievably spontaneous, and it's happening right now. And that's why we're getting the market that we got. Here's Brad Gerstner. Let's get a little bit of his thoughts. We got the market close in about 6 minutes, and then we will keep going from there.
You've caused the bond market extraordinary stress. You've left CEOs, as I said, paralyzed, and that just doesn't disappear with a pivot.
Yeah, I get, you know, Scott, remember, it was a week ago that we announced these tariffs. I know it feels like it was a couple of years ago at this point in time. So, yes, there's been maximum uncertainty. Yes, he was hearing from a lot of CEOs that this uncertainty was causing demand destruction. I'm not saying that all this change happens painlessly, but I've talked to 5 CEOs in the last hour, including some of the largest CEOs in technology, and they've all told me this was exactly the prescription they needed, you know, so that when they get on their quarterly calls now, they can actually, you know, give guidance as to what the path ahead looks like. You know, what wasn't working was them not having a flight path, not knowing whether or not we're going to have 50% tariffs, 70% tariffs, but knowing we're going to have 10% tariffs, that we're going to negotiate down from there with these other countries. That now gives a framework against which I think people can operate. And even Delta today, before these announcements were made, Scott, right, they gave their forecast. Their forecast clearly showed demand destruction, and the stock was up 10% even before the president came out and announced the 90-day reprieve. So I think that's evidence of the fact that the market was discounting well ahead of where all this was, that there was a lot of fear in the market. Listen, you have a 10% move in the NASDAQ since the president's tweet. That just goes to show you how much fear and how much discount there was already in the market. But most importantly, I think you nailed it, comes to the fundamentals. Are these companies going to be able to get back on path, right? And look back at this and say, okay, we had a 1-month delay in terms of our plan for the year. We ran the risk that if this continued for another 4, 6, 8 weeks, that we're going to find ourselves with one foot in recession. So I think today was essential. I think the president did what was needed to be done. And I think this will go a long way to helping us avoid the recession path. But as he said, we're a long way from out of the woods. So I think this is an important start, but there's a lot of work to be done.
But I just want to underscore this one point with you too, that you have spoken directly today with some large technology company CEOs. I'm assuming maybe some in the Mag 7, you can correct me otherwise, who now feel like they have at least a path towards visibility that they might not have had even 3 hours ago, and we may hear that reflected in coming earnings calls.
Correct. I talked to the same CEOs last night. Listen, over the last 3 days, there's been a lot of concern. In particular, the concern centered around comments by Peter Navarro, where he said, even if Vietnam reduced its tariffs to zero, that wasn't enough. We had to eliminate the $125 billion trade deficit, which, of course, everybody knows is impossible to do. So if that was the standard, if that was the framework, then we were in for a very long and destructive process here. So this was, again, the Bessent, the Howard camp within the White House leading the path forward, saying, no, this is about tariffs. This is about targeted, smart, and fair tariffs. The president just reiterated again, when you broke away there, that he's about making deals, fair deals. He said these will be fair deals. And in fact, he went on further to say he expects to get a deal done with China and for that to be a fair deal. That's exactly what CEOs needed to hear. I think if you look at how business is, I think Q1 was pretty reasonable for all these companies. And it was really only over the last 4 to 6 weeks, but accelerating after the announcements of the reciprocal tariffs last week, the uncertainty got injected into the market. We saw it reflected in the VIX. We saw it reflected in the bond market. And all of those things were having very negative consequences in terms of the demand coming into these businesses. My suspicion is that a lot of that is allayed as of today, and these CEOs are going to be in a lot better position, a lot more confident position when they get on these calls.
Some of these stock moves, Brad, are just.
All right, we are getting into the close. S&P is about to close. It looks pretty damn green, 9.66%. 15 seconds away. Hoodie up 23, Pouncer up 18. We'll have Kris on in a couple minutes and get his thoughts. I mean, I agree with a lot of what Brad Gerstner said. At the end of the day, if we are changing the overall narrative when it comes to this tariff volatility, this is the reason that we're seeing this momentum. 4 p.m. Wednesday, April 9th, 7 days after Liberation Day, the stock market is now closed. What a day, folks. S&P 500, 9.48% on the day is how we ended out. I think, again, that is one of the best days in, or is one of the best past, is one of the best, it's one of the 12 best days from a percentage perspective. I don't know what year we had a better day than this. I think it was back in 2020. I'll confirm in a bit. But S&P 500, 543.54, up 9.48%. It is still up after hours at 544, up another 0.2%. NVIDIA up 18.72% of the day at 114. Grab up 14%, back in the 420 range. Palantir 19% on the day. Robinhood 23% on the day. SMCI up 15%. Micron up 18%. ASML up 15%. Intel 18%. DJT was up 21% on the day as well. Tessie up 22%. SoFi up 19%. Apple up 15.3%. Celsius up 9%. Enphase up 9%. Netflix up 8%. Google up 9%. It felt like I was saying all these names for the past couple of days, but saying down 9% or down 5%. Now it is completely switched to the opposite direction. If you're just joining, Trump announced a 90-day pause on tariffs across the world, except for China. For China, he actually upped the percentage from 84% to, or 104% to 125%. But the market doesn't care. The market is fine with China being China and the rest of the world not being involved. Tesla 272, up 22% on the day. Mag 7s, Apple 15, Microsoft 10, Meta 14%, Amazon up 11%, Google 9%, NVIDIA 18%, and then Tesla up 22% on the day. Christopher Patel, what is your reaction to all of this?
I firmly am in shock seeing everything that's happening right now. But I think logic actually won out. I think we need to get to the crux of this. There's been two camps in the White House. Basically, you've got the Peter Navarros who are like, we need to be max tariff on everyone and just with stupid ideas. And then you got the Scott Bessents of the world with much better ideas how to be moderate with everything. And what we just saw in this market was a Trump pivot because the market moved down. Okay. I know a lot of people here are saying, well, this is just Trump being Trump, part of the deal. No. This was market went down. He saw how crazy it went down. But Sen said, look, if we don't control the markets right now, things are going to get out of control. The way that they did it smart. They played the tariff down back to that 10%, which is what the market originally wanted for Liberation Day. Liberation Day could have been 10% from the get-go, and the markets would have rallied. It didn't happen that way. Trump went max pressure. Bessent gave him an off-ramp. I think a lot of companies, they reached out to this guy. A lot of billionaires, including Ken Langone, Ken Griffin, everyone reached out and said, look, either you are going to change some of the wording and how you approach this, or you're going to put the country into a recession. And once the country's in a recession, that's it. You're pretty much going to have a much more difficult time. So I think Trump realized that. Scott Bessent was able to convince him that, look, if we do it this way, you won't lose face. You'll actually look like a genius. And I think that's what actually happened. I know a lot of people are going to say, no, this was the plan from the beginning. No, this was not the plan from the beginning. Okay. I don't think Trump thought that the market would go down nearly as much as it did in the quickness that it did. And now that it's like starting to go back up, this is kind of like reinforcing behavior. So I think now you're going to see like a spattering of all these deals that are going to come around, and max pressure on China is still there, which is another catalyst if they end up getting that resolved, where we can see the markets higher going forward. But I think the thing with China, they're going to leave on for quite some time. That's not going to be resolved anytime, in my opinion, anytime soon. But what's good is a lot of companies got to the point where they were oversold. And the reason why they were oversold is not because there was anything fundamentally wrong with those companies. It's only because the sentiment around the market got too crazy and they got oversold. So right now, people should be buying. Like I've been buying my Venture Global position, which has been great because Venture Global did well. And then I think, and that was something also that we have to consider, that part of these negotiations are still going to involve reducing down the trade deficit, utilizing some of the things that this country has an excess of while the other country is in need of.
So you don't think this is a dead cat bounce?
No. This is a complete pivot from the Trump narrative right now. And I think this is going to be a reinforcing thing where the markets kind of positively react. I think one of the great things is earnings is coming up, and a lot of people were worried that CEOs were going to just be like, hey, listen, we don't know what to make of it. We don't know what the tariff regime is going to do to our earnings and all the other stuff. Now, I think they're going to be able to give at least some level of higher amount of clarity. And I think that can actually take us off the wall of worry. So this is not, we're going back to all-time highs next week, but this is, hey, listen, there's a lot of companies extremely well that should continue to do well if the specter of tariffs is finally lifted.
Does Trump get any credit for this rally?
No.
Why?
This is the Bessent rally. This is not the Trump rally. Okay.
What if to just push back? What if the deals are so good, and the only reason the deals are good is because he went, gung ho on the tariffs and didn't do the 10% initially? Does he still get any credit after that?
No, dude. This is all Scott Bessent. 100% the credit should be going to Scott Bessent on this. Trump really overplayed his hand with the tariff thing. I really don't think he came to the conclusion that 10% was going to be the right amount. He was trying to get a feel for what the level would be. And he originally sided with Peter Navarro's of the world, and that was a really dumb move on his part. The markets reacted negatively. The one piece of credit that I will give to Trump is that he is able to flip in during times like this. So unlike unlike other people that are more mired in their ideologies. Trump saw the writing on the wall and he flipped. There's no other way around it.
Guys, is there an issue with the audio? Kris,
no, everyone's just fucking around, dude. Everyone's like that. They do that. There's nothing.
No, there's like, dude, why are they? Wait, is the audio? Hold on.
Everyone does that to you, dude.
No, but there's too many people. Oh, I'm beneficial. I can trust him. Is the audio good? Or no, I think everyone's saying the audio.
Okay. Maybe it's lagging.
No, but you sounded fine on my end.
Yeah. Maybe it's StreamYard.
That is so weird, bro. That is so weird. Okay, anyway, basically what Kris said is that this is audio's fine. Okay. If audio's really bad, put a bunch of thumbs downs in the chat, but hold on, let me hear it from my end. It was really bad, put a bunch of thumbs. No, it's good on my end. It's good on my end. That's weird. Yeah. Oh, that was parts of yours. Okay, cool. So essentially you're saying this is the percent rally, not the Trump rebound rally. And you're saying even if he gets good deals done, the what he went through, aka taking away $5 trillion from the stock market to get those deals done, to you isn't worth getting those deals.
Say that again.
Even if the market rallies back, are you saying it was okay for him to go through all this turbulence to get good deals if we needed this turbulence to get the leverage to be able to get good deals from other countries?
No. This is long-term stability. You're putting long-term stability in people's eye, and you're asking like, holy shit, like this guy can really do this all of a sudden. No one wants to deal with people like that, from a business standpoint, dealing with even dealing with, an individual who's going to basically flip-flop on it. It's not a good thing. So, I could have lived with a 10% from the get-go, and I think the market could have lived with that. I think all the other parties, like countries involved, could have lived with that. But he just went max pressure, and now he's backed off of it. And I think a lot of people are calling him a genius, like, oh, all these countries reached out, blah, blah. Yeah, but you also kind of stoked this long-term fear in a lot of politicians around the world, saying that the U.S. could possibly one day not be.
You got to stop. They're saying they can't hear us.
Yeah.
But yeah, I think you guys might have to restart YouTube, dude. This is a YouTube thing because some of you guys are saying it's okay. Spencer said to restart YouTube. Yeah, guys, I would restart YouTube. That is because I'm playing it on my phone. It is totally fine.
Yeah.
And it shouldn't be on my phone. One sec, Kris. Yeah, I don't think it's a StreamYard thing, guys. I think it is a YouTube thing. My mic seems like it's fine as well, so that's not the issue. It's good. It's good. You have to restart. All right, cool. So do a restart. And it should be fine. Okay, cool.
Yeah.
All right, Kris, can you just repeat what you said for 2 minutes?
Yeah, no, I'm just saying like the reputational damage of the United States, right now the markets are rallying and everyone's happy, but dude, like no one wants a trade partner who's like, yeah, I'm going to tariff you. And then, it's like, oh yeah, but let's be friends now. That's not how you run economic or trade policy, because long term people are waking up to the idea that, hey, maybe we don't want to be in a position where we're so dominated by the US that in the future we could be threatened like this,
Right.
Like just think about it. He was telling like his wording yesterday was terrible. He's like, I got all these people calling me and telling me that they want to kiss my ass. Like, really, bro, you're a world leader, and that's how you like. No, this is Scott Bessent working in the background, talking Trump off the ledge, saying, look, if you don't do this, you're gonna be in a world of hurt.
What if countries were calling and kissing his ass though?
Dude, you're not supposed to come out there and say it like that. Like, you don't go around the world insulting people. You don't go around the world doing that. That's not cool, man.
I don't disagree with you. I'm just saying, I mean, we know Trump says crazy shit, right? I mean, he literally told you to buy the stock market today.
Yeah.
I mean,
but this is what I mean. Like, this is one of the beauties of having some good people in the White House. Thank God we have Scott Bessent over there, who basically talked down a lot of the world leaders from doing reciprocal tariffs right after they were announced. I mean, if you saw the Rose Garden interview, he's like, look, guys, do not retaliate, because if you retaliate, there's going to be like a major problem, because he knew what Trump's personality is. Trump's personality is like, oh, they put a tariff on me, let me put a tariff on them more, and it worked out that China was the one that blinked first. I think too many people right now are in this camp that Trump is some kind of like master grand strategist. No, dude, all of this, you got to give to Scott Bessent. Okay. He went to Mar-a-Lago on Friday. He spoke to Trump and said, look, what you're doing right now is untenable. You're going to cause a recession, and it's going to be a bad one. Elon Musk probably reached out also to Trump and said the same exact thing, saying, look, Peter Navarro is going to drive you and this country into the fucking ground if you don't pivot right now. And you know what? Elon and the Scott Bessent camp, they won. Thank God that they did, because now the market's rallying. Trump got to save face, which good for him, you know. And I think going forward, Scott Bessent is going to be taking more of a lead on all of this stuff.
Okay, last question, Kris. Then I'm going to switch to Trump. He's live right now signing some executive orders. Are we back in a bull market, Kris?
We are for now. Hopefully, the policies of Bessent can keep Trump from his worst instincts. I don't know if you guys know this, but Trump, during the last administration, he had Gary Cohn as his economic advisor, and Gary Cohn had to talk Trump off a lot of times. All right. This is the same exact thing that's happening again.
All right. There we go. Kris, you were up a lot of money today, I imagine.
Yeah, I was. Thank God.
All right, man. Have a good one. Appreciate your thoughts. Talk to you later.
Yeah. Take care, man. Bye.
Take care. All right. We got Trump live. Let's see what he's saying, and then we will keep going from there. We're going to have Jason on in about 10 minutes, and we'll get his thoughts as well from a TA perspective in terms of what this market is looking like.
Our war fighters need in order to compete on the battlefields of the future. So with this executive order, we're going to be modernizing the procurement structure the Department of Defense uses to allow it to more quickly adapt to changing circumstances around the world. And we're also going to be launching a review of existing procurement programs to ensure that we're getting value for the money and to ensure that we're getting the best possible systems in the field.
And which are currently horrible. I tell you, they're horrible. That process is ridiculous what they do. They get the highest price. We have somebody that's done a great job at Department of Agriculture, and Kristi Noem, who perhaps a few of you have heard of. She has done the most unbelievable job as somebody that's watching over a country at the border. And
okay, so I don't think much is going on there. He's I'll get to him when he takes questions. For now, he's still signing the executive order. So when he gets to questions, he'll talk about tariffs. But literally 20 minutes ago, he was live and he already answered questions about tariffs. So I don't think he's going to say anything that's that different from what we heard. Pretty much will be, hey, we want to put pressure on China, but we don't need to have a massive tariff policy on the other countries while we're negotiating. I think I'll have Steve on in about 15 minutes, so we should have Steve on in a bit. I know he wanted to come on. I'll see if he's still free. But until then, let's get some thoughts from a TA perspective, even though he's not near his computer right now. Mr.
Am I on? I'm like working on the other office. But here, let me see if it's a mess. I'll walk out for you. Yeah, I cannot look at the charts, though.
You cannot look at the charts. Oh, is this
I cannot look at the charts.
All right. Nice.
Yeah. Well, this is we're actually building the next studio right there.
Oh, perfect. But that's not the studio I went to. It's at a different location.
No.
Okay.
No. This one I told you we needed the trees for you. Big trees and the whatever trees.
All right.
But dude, I'm watching these comments. I'm like, no way. You guys, I texted him it like 20 times. I'm like, this is crap. And by the way, sorry if my reception's in and out. It's like, dude, you gotta let me on and say something.
Go ahead. The floor. So basically what people are saying right now is the TA couldn't have seen the Trump pivot today.
Well,
what is your response to that?
I think that if you don't understand TA, it's easy to say that. But and if anybody got scared yesterday, like, dude, I was really trying to say it's not sell, it's buy protection. And by the way, that protection got cheaper today. So what I will say is to think that it's all like we don't have anything chopping in front of us, like that would probably be a pretty big mistake in my mind. We have CPI tomorrow, we have PPI the day after. There's still stuff, and towards the end, I was like, it kind of feels like Trump's gonna pretend to put the shovel down, and then he's gonna walk around in the back and pick it right back up. And so I don't think that changes, right? So like again, my caution was like, I'm not selling short dated calls. I am buying short dated puts. If they go to zero, hopefully they go to zero and it's all good. And that's literally where we are. And best case scenario, great. And I can't see the comments right now, but read them off to me, dude, because I would love to address it.
No, I think that's fair. I don't think anyone's saying it's wrong to like buy the puts or anything. I think the core argument and what I'm seeing from the comments is, and it's a lot of people saying the same thing. So I'm just the messenger here, even though I do get the argument, which is, hey, the TA could not have known that Trump was going to tweet 90-day pause and we would have a 10% rat. I think that's
it did. That's but like I'm watching.
Hold on, the TA said S&P was going to go up 10% today.
Yeah.
Okay.
And I caught it.
I mean, I wouldn't
go look at the timeline. But and I was posting as it was happening.
That's fine, but
before the
you understand how that claim is hard for people to understand. That
I do understand that's hard for people. So why I made such a big deal about looking at Friday's high and Friday's low. Can you draw, like Amit told me today that he would actually draw lines on his charts?
No, Friday's high was 520, right? We're way above 520.
Bingo. But look, I'm looking at a 1 minute chart, and Friday's low. Friday's high and Friday's low. My pinned tweet is that if we're below Friday's low, we're going lower. If we're above Friday's high, okay, we're going to go higher. And in between, we can go from the low to the high. So all of that happened within the span of but draw a line. Friday's low.
Because
can you do it?
It's not about the drawing of the line. I think the problem,
but that is TA.
Sure, but the problem that people are having is if yesterday was bearish and you have these conditions on it needs to be above the low or above the high to be able to say we're in a bull or bear market, that's fine. The problem is the actual move to the upside based on a fundamental catalyst, which is the 90-day pause. You have to admit there's no way in hell TA can predict that. Like, that's just not possible.
TA just predicts like when you're going to stop going down and stop going up. That's what TA predicts, right? And it will tell you where we're going to go to, right? What I'm telling you is that the velocity of what we do, to your point, the 10% in, how long was it? A couple hours.
Yeah.
No, it's not going to tell you that. It's not going to tell you that. And like that is the COVID level of volatility that we're in.
Yeah, so I think that's the point. I think that's what everyone is concluding for. Like everyone's conclusion here is just like, yes, TA is valuable and there's ways to find when it's important to buy or sell, and higher highs, lower lows, all that stuff matter. But regardless of whatever line you draw from the Friday high to the Friday low, the fact is nothing in the chart could say, maybe the options flows, because we had some people buy a shit ton of S&P calls at 10 a.m.
We had both flows. So the flows wasn't really clear. There was flows. There was a $26.25 million single trader order at like 425 puts for May. Also, that was the largest order of the day. So flow is you can't really trust flow.
Well, I get it. So that's my point, right? It's like the flow or the charts, I don't think necessarily gave people an easy way to predict that it would have happened. But I mean, if you went long today because of the charts, then who cares, right? It's working.
I mean, the whole idea was, look, we're not going down as long as we can anymore. We were going down yesterday. The second we reclaimed Friday's low, that's when you're like, okay, we're not going to go down. If we can stay over Friday's high, cool. But to think that we can't come back down to Friday's low and possibly put in a higher low, I think that would be best case scenario. Or even if we just hold Friday's high, that would be best case scenario.
I think everyone thinks we can lose this tomorrow. I think there's no one in the chat that doesn't think we could also see some of this loss tomorrow. I think what people are not believing is that the charts would have told you today at S&P 500 498 buy because it's going to 540. Like that.
I made like 2,000% in like minutes, but I mean, I don't know what to say other than I posted it, so that's where it is. But I think, to your point, as long as, it's a big move. We've had a lot of big moves lately in both directions. I I think we can go up tomorrow, and it's about like, can we hold it through the week and then open up on Monday around there through CPI, through PPI, and see how it goes. If I flip, I'm on mobile. If I click chat, will I lose video?
I don't know, actually. You can check. But I mean, look, I agree. If you're really good at TA, you should be able to find the opportunities. It's just, it is hard to prove to people that the charts could have easily seen a 10% intraday reversal, you know? But you make 2,000%, you make 2,000%. It is what it is.
All right. I don't want to look at the chat because that looks really bad.
Dude, I'm telling you, people love TA, but this is what I was telling you on Sunday. It's like when things get bearish and there's no certainties, only the most advanced traders understand how to really navigate it. But the far majority of people, like myself, are just like, all right, we're waiting for the catalyst from Trump. If we get it, we get it. If we don't, we don't. You know?
Well, so far you got it. Maybe he takes it back, maybe he doesn't. But that's a guessing game. For me, it's like I'd rather see it live, like as it's happening, and knock it if you want to. But it was there.
All right, cool.
All right, buddy.
Thank you, Jason. We got Tom Lee on.
Guys.
Look at him. Yep, talking a bit later. All right, Tom Lee on CNBC. Let's see if he thinks this market has some legs behind it.
Tom Lee. Tom, were you getting nervous here with what the market was doing? I know you expected things to go a lot better for the major indices this year.
Yeah, John, I was getting very nervous. I think the biggest sign was I was going to bed every night, checking futures, reading everything, and wondering if the market would open limit down. So I was getting very nervous. But of course, now this is a really big positive fundamental development.
So why aren't you still nervous, given the velocity at which things continue to change? How do you find signal in the noise? How encouraging is it that after saying that they weren't going to negotiate, the administration is now negotiating? After saying they weren't watching Wall Street's reaction, they really do seem to have been watching the market?
Yeah, I'm going to have to make some guesses here, but I think one of the positives is that I think the White House exercised the Navarro put, meaning they are now inserting Bessent more into the negotiating process, which I think is less of a hardline view. When I look at what this means for the next few months, I do think because of the tariffs and they've been dialed down, companies now have what's effectively probation. So if they cut guidance or they don't show guidance, markets can look through it because they know it's an adjustment process. So I think it's taking the pressure.
That's a really good point. So even if companies like American Airlines, or not American Airlines, Delta today, American Airlines was up 25%, but Delta today cut their guidance, or they not cut, but they said they're just not going to give any guidance at all. Now Tom Lee's argument is that companies can still do that and get away with it because there's not some unknown thing happening in Q2 that is going to affect their guidance, because the tariff volatility theoretically is gone. So you can still get away with not giving guidance, at least for another 90 days to be able to navigate it, which is really bullish, because if you have a good Q1 and just say, hey, we need some more time to give you guidance, then the market should be rewarding and overlook the lack of guidance there.
Pressure valve of investors panicking on earnings. I also think it's been really good news to see Tesla rally, because, it's been our view that Tesla's more or less the exhibit A for what kind of bounce can ensue, because remember, Tesla got hit the hardest first, and actually it's been holding some important levels. And then I think there are things really, as we look towards the next few quarters or a few months, to be positive about, because there is the tax deal. And, at the end of the day, there was a lot of technical damage, but a lot got repaired. So, I do think this was an important day.
Apple popped 15% today to close just below 200 a share, but we still got those 125% tariffs on China, which is going to have an impact on Apple, but not just Apple, on a lot of companies. How do you factor that in as an investor now?
Well, yeah, the pressure valve has been released for basically the other 102 countries. In China, the pressure is intense. Obviously, these are ludicrous and absurd tariff rates that each country's imposed on each other. So I do think yesterday investors would have worried that these were permanent rates that were going to essentially lead to Apple's cash flows being choked off. Now I think investors realize there is time because it's a negotiating tactic. I think it's going to be a change in how markets interpret this, even though it is doing damage to companies.
So given that, where are you putting, how are you shifting, if at all, your money? Based on what you've seen before, is your strategy changing?
Well, before markets fell out of bed last week, our take was post-tariff liberation day, we'd want to stick with what we thought would work at this year, which is the financials, the industrials, and small caps. Those all got massacred. But now that we may actually have seen what could be, a bottom and possibly a V bottom, I think those are also going to lead. But the Mag 7, because they fell first, and as I said, Tesla is Exhibit A, I do think people need to actually have the Mag 7 in that mix as well.
Yeah, this was so quick. It's not even a V. It's like a needle bottom. Totally.
It's a Dongxing.
Oh, wow. Yeah. Quite a thing to see. Tom Lee, thank you.
Dude, Tom Lee did say there would be a V shape. I mean, maybe that V is going to take a little bit longer than he thought to show itself, but and obviously we're still pretty red from where we were originally, but still, actually, if you look at it, we're down a little bit after hours, 0.5%. 548 on the S&P. This was the level we bottomed at before we had the dead cat bounce. So yeah, look at that. Let me pull up the 3-month. So we went all the way back down to 548 right before bouncing right there to 570. That was back in March. There it is right there. 548 March 13th, then 576 on March 25th, right? And then from 576 all the way back to 548, hitting that 2025 low. And then we really got flushed. That's when the April 2nd announcements were, back at 480. Bounced up a little bit, came right back down to 480. And now this one is your big candle to the upside, 548, which is basically right at the levels that we were on March 13th. So it's almost like in a month, yes, we've lost some percentage points, but we've recovered a significant amount of it. And seeing 550 to 560 again, if we have some really good earnings by the NVIDIAs, the Palantirs, the Metas, Googles of the world, is not out of the question. Not out of the question at all. It's pretty incredible, dude. This is pretty freaking crazy. This is crazy. Dude, if we get to be rich again, because I enjoyed being rich. Again, it was fun. It was really fun. Steve said 10 minutes. He'll be on in 10 minutes. Steve will be on in 10. Getting to be rich again would be it would be a blessing to experience Saratoga again, even though now I can't drink it because you guys are too suspicious about it now. But who knows, bro? Maybe I like green. Dude, it's just, life is so much better when things are green, bro. It's great. It's like weird, bro. Like as soon as like you saw the reversal, I think it was at like 2 p.m. The whole mood for the day, everything changed. Everyone's just feeling a little bit better about themselves. Like it's just like you start thinking like, oh, maybe I can be something in life. Maybe I can achieve things. Like it motivates you so much. And I said this in the morning. It's like, if we were going to have a drawdown, I'd rather have it when you take the Band-Aid off versus a 2022 where it's like every single day. It's just, you keep getting hit in the face versus just do it all at once, which we did in 34 days. We went down 20% and now we just came right back to an extent. We came back about 10%. Need another 10% to get back there. My portfolio was up 25% today. Biggest day of my life, up 50% of my yearly salary. Wow, dude. Wow. I mean, see, like, these are the beautiful things about investing. And again, I don't know how sustainable this one is in terms of if we give back a couple of percentage points, I think that's fair. But I agree with Chris wholeheartedly. This is not a dead cat bounce. And maybe we'll be humbled if it is, but it really feels like an entire pivot, a narrative shift. Navarro is not the one advising Trump anymore. It seems like, at least given Bessent is the one who gave the press conference for this announcement, even though Trump tweeted it. And so Bessent probably convinced them this is the right idea. And maybe it was for the markets. I mean, I imagine the majority of the reasoning was for the markets, but also it was probably because they really do want to get deals done, right? And maybe they didn't have to go through all this stuff to get those deals done, but regardless, if they get the deals done and they just don't need to be as harsh, the market has the ability to overlook it. The NVIDIA covered calls at 110. Yeah, I've got to navigate those. I'll let you guys know how I manage it. Probably going to have to roll it. I mean, if this green continues over the next 2 days, they expire on Friday. Probably going to have to roll it a month, maybe 2 months out into the 130s, 140s. I don't know. We'll see. Maybe we're 120 by Friday. So it's a problem we have to manage, but nonetheless, I got to be humble enough to say I didn't expect a 90-day pause on Wednesday. So as soon as I saw the 104% tariffs yesterday, it just felt like, all right, it's going to be painful. And now with one tweet, things change. Granted, I do think, I have been saying every single day, there's still, even this morning, I was like, there's a part of me that feels like these tariffs are just so asinine that it's hard to imagine them being implemented. And like, I don't think that's a unique take. Pretty much everyone felt like these tariffs are insane. There's gonna have to be some deal. Apparently the day they're supposed to be impacted, April 9th, which is today, you get a deal. And the deal is a 90-day pause, which fundamentally changes the trajectory. And for those that didn't think he would say that, like myself, you got to deal with it, because now you might be in a little bit of a sticky situation with covered calls, but that's what happens. Regardless, I would much rather have this happen than no pause, because again, we don't need to be putting 10% tariffs on penguins. So it probably makes sense to have a fundamentally different approach right here. What if we see some downside momentum from here? Yeah, I think we could see some downside momentum. I just think that a lot of it now is based on this pivot. Navarro screwed up with Musk and Tesla. Yeah, I mean, look, it seems like Trump picked Elon. Elon's brother, Kimball, said, had 5 more tweets today about why Peter Navarro is an idiot. And so when you have this level of outrage against one of Trump's biggest economic advisors, I think Trump looked at that as well. And he was just like, you know what, this is stupid. It's time to probably make a pivot and get rid of some of these tariffs. Let's finish up with Gerstner. He was talking for a little bit. There's a couple other headlines I want to get to, but this is what Gerstner had to say on this pivot a little bit earlier today.
Just extraordinary double take like moves, clearly. NVIDIA, for example, is up near 17%. You told me the other day that you were buying more on the most extreme weakness of that stock. For people who listen to you about these names, what are you doing today on this news? What would you advise people to do now with some of these largest stocks in this market?
Yeah, I mean, listen, moves like this are debilitating, Scott, and I don't love this volatility. I know on Monday and Tuesday that Schwab and Robinhood, they were having record volumes because retail investors, folks like my siblings, my nieces and nephews back in Indiana, they get worried. They can't afford to lose 20 or 30% in their retirement accounts. So they do the worst thing, right? They're forced to sell on days like that because the fear is going through the roof. They got to prevent further losses. That's hugely unfortunate. So this is a Main Street problem when you have this level of volatility. But as I look at it today, I'll just throw out a framework. Go back to April 2nd and look at what the prices were of these companies on April 2nd before we had these announcements. And even with these massive moves today, most of these stocks and indexes are still trading below the level they were trading at on April 2nd. And I would argue that now we're in a much better position because we know the flight path forward. And so, yes, NVIDIA is our largest position. We bought a lot more on the bottom. But listen, we were nervous like everybody else in the market. This was a really important step forward, but we got to see follow through. I expect we will see follow through in terms of these negotiations. And I'm hopeful. And the big win here is that we get to the negotiating table with China. We get a deal done with China. We extend the tax cuts and we continue down the path of DOGE and deregulation.
Here's the stat on the NASDAQ. Today was the second largest day for the NASDAQ, 12% in a day. The first largest day was January 3rd, 2001. That was up 14%. That was the first largest gain. And the third largest gain was October 13th, 2008. That was up 11%. This is the second largest gain intraday for the NASDAQ, up 12% on the day.
If we get all these things, the market and the economy can look very different 5 or 6 months from now. It's rare in my 25 years of doing this. Do you have such negative views and such concern juxtaposed right next, to this potential positive outlook for the economy? But it's where we are. And the president, like you said, you can love or hate the tactics, but he's the negotiator in chief. And today is an important day in terms of setting us on a path that I think is durable for the economy.
We'll leave it there. I so much appreciate you coming on. Certainly, you came on in the depths of it the other day.
Gerstner bought the dip on NVIDIA. He bought the dip, so he's probably feeling pretty happy. Fear and greed went from 3 to 17, which makes sense in my opinion, because we literally went from 2022 S&P levels to March 13th, 2025 levels. So yeah, that type of a jump makes sense. There's probably still extreme fear, but I mean, look, the second largest day in the history of the NASDAQ, that's a little bit more FOMO and greed than fear. And so it makes sense that we're coming in right here at 17. Here's the question again, like, do you just let this play out, right? Do you sell into this? Do you take advantage of this, or do you let this play out? I think for a lot of us, it's been, no, we're going to go down with the ship and hopefully the ship recovers. And right now the ship is on its way, it seems like, to recovering. But if you didn't sell and you just bought, I feel like, and Jason made a good point, right? That protection is cheap now, right? So like you can actually like Trojans are on a discount essentially, right? So those puts across whatever stock you wanted, because of the massive move that we're seeing today, it's going to come down. And those premiums on those puts, if you lose whatever money you put into them, if you're hedging a position, it's whatever, because the markets went green. But if we do see some more volatility to the downside and those puts print, you have a little bit more protection and you get to buy it cheap. So, I'm not an expert on hedging. I've never really learned how to hedge. I've started to read, based on this experience, a lot more articles and analyses on like what it means to really hedge a portfolio. And that's something that I definitely want to get deeper into learning. But like my concept of a hedge is like you just, buy short QQQ or something like that, or maybe you buy some cheap puts. But there's lots of complex strategies on how to hedge a portfolio. And I think if anything, this experience for a lot of us that probably don't hedge and that are long only, maybe it forces us to learn a little bit more about what it means to hedge. Because obviously the downside is not something anyone can avoid, but we can mitigate the amount of pain with some hedging. Nonetheless, I do think people will buy some cheap protection here, but I also do think people don't easily sell into this rip, because no one wants to miss out on this magical AI revolutionary bull market that we were promised would happen. And for 2 years, that promise has been kept. Were tariffs really going to stop that? It seemed like that, but now it feels like tariffs might not be the end all be all for this market. Steve, are we in a bull market? You're muted.
I just realized that I wasn't in the show and I was screaming at you.
What were you screaming at me for?
I was just screaming at you.
Okay.
For the questions that you were asking.
Well, now we're in the show, so let me ask you these questions. Are we in a bull market?
Before we do, Amit.
Yes.
Do you still need a warm towel to, pat your hands with, or do you need some chocolates or something to soothe you?
Yeah, dude.
I told you there was nothing to worry about.
I need you to tuck me in, bro. Like I'm a scared little,
I mean, like I said to you last night.
Why are the cops always in? Can the cops go do something in New York? Why are they always there, bro?
They are doing.
Can they go clean up the city? Like, why are they like? It's so annoying, bro. Like, goodness.
Imagine how it is when I'm in a meeting and that's all you hear outside my office window. Anyway.
Bro, it's like every time the sirens are going off. Like, goodness, dude. Holy
I thought we were gonna have to send our buddy Chris Patel a care package with some scented candles and stuff. I mean, I've been telling you guys, it's been a couple of days. Don't worry.
Okay, so you did say Sunday you felt was the bottom. A lot of people remember that, and they're referencing that in the chat. Here's my question: was Sunday at 480 on the S&P actually the bottom?
I think it was. And by the way, this is not a cop. This is actually an ambulance. So
okay,
hold on, they're passing me.
Yeah, that's fair.
Okay. As I said on Sunday night during the show, I thought we bottomed when it started rebounding off of that. I stand by everything I said, that I thought this was a knee-jerk reaction by the markets because nothing was set in stone at the time, and everything was hearsay. No company profits were impacted in Q1 from this. We didn't hear from the investment community on earnings calls, and nobody changed guidance. It was all a whipsaw, and we knew that what was said 1 hour could change the next hour, and that things would be volatile for a little bit. Things could still be volatile, but I think the worst of it is over. And I guess I have ice running through my veins because I did not think this was a reason to worry.
So what I think was unique about you is, you just have a very nonchalant attitude when all this stuff is happening and you just don't care that much. I think the majority of people agreed with you, which is that, hey, we don't care, but it's hurtful to see this much of a drawdown for any human being. However, from my understanding, a lot of people didn't sell. At least a lot of people in the chat. I mean, maybe some people sold something, but most people like held on and just.
Yeah, you and I were talking about this. I don't know anybody that was selling. I don't know anybody that was making any moves in their retirement accounts. Everybody was just looking as, oh, that sucks. The number on the screen's a lot less than it was the day before, but that doesn't cause people to sell. And I said this at least 3 times on your shows in the past week. I think it's a combination of people getting margin calls, stop losses getting triggered, and algos selling off. This was not something that I thought was something where normal investors were selling.
No, I think you're 100% right. And I talked to a lot of people over the past 72 hours, every single one of them super upset about Trump, tariffs, bearish, yada, yada. But then when I asked the question, so are you selling? They were like, fuck no. Because no one, like at 480, at 500, no one can afford to go back 2 years in time by selling and saying that all those gains were fake, because we had real earnings.
But it's not even just that. Even if, let's just use even numbers, okay? A 10% drawdown. People are not going to freak out on a 10% drawdown because they're still up quite a bit over the past couple of years. And if they've been investing for a long time, they have even larger gains. And the tax implications from selling off put you at a net negative position. And then you eventually have to roll that money back in at some point.
Right.
And it's just you're rolling in less money. So you have even more work to do. So if you don't need the money immediately, it's just something you ride out. And I really do think that a lot of people weren't investing or just forgot what it felt like during 9/11, during the financial crisis, during the oil crisis. And the pandemic was different because there was a huge amount of liquidity pumped into the system. But I remember in the financial crisis that driving through certain neighborhoods on Long Island, New York, okay, some of the richest, wealthiest neighborhoods in the country, I have never seen houses ever for sale on some of these roads before in my life. And I used to work out there.
Did any of this over the past couple of days feel like 2008 at all?
No, yet in 2008, legitimately every third house was up on the market for sale. And you would never see these houses for sale. And not a single thing of the past week resembled anything from those periods in time. Nothing.
Okay, so let's talk about the actual news that happened today. First off, Warren, thank you for the 1690 Taiwanese dollars. He says we didn't sell. It's called grinding. I love it. Thank you for being here. Charles as well. Thank you for the $10 super chat. I don't hedge. I invest in the future. No future, no need for money. Being long and DCAing obviously is definitely a strategy that has worked for a lot of people. Steve, when you heard the 90-day pause, what was your first reaction? The cops got him. There you go.
Sorry, man. I got a phone call and I hung up on the person.
Wow. The chat, is that much more important to hang up on whoever just called you?
That person can get a call back when we're done.
So you're admitting that you love the chat.
Let's put it this way. There's very few people that I would pick up for and put you guys on hold. That was not one of them.
Wow. So you love us.
I wouldn't use the word love.
Dude, no, Steve is an Italian New York City mobster. He can't even express love to us. He can't even be like, yeah, I love you guys. He can't say it.
What I am saying is you guys are very important to me. And there are only several people that I would take a phone call from.
Steve, the amount of people that spam your name in this chat every day. Like you think I'm joking, bro. Every day. Where's Steve? Where's Steve? This is Steve's show. Why the hell is Amit here? Where's Steve? I just want you to say you love them.
They are awesome. And I do have to say, when I am not driving and I come on and I read the comments, it's very hard for me to keep a straight face because the comments in your chat are absolutely incredible.
They are incredible. That is correct. Okay, so where were you when you heard about the 90-day pause and what was your reaction?
Somebody texted me.
And were they like, WTF?
My phone was blowing up with text messages. I was really busy today. And after it kept blowing up, I'm like, all right, well, obviously something happened in the market. So I looked at my phone real quick and saw it and just went to my quick track. I'm like, oh, that's nice.
But I would imagine you were a little happy seeing it.
I mean, look, was I happy that my account says a much different number now? Of course, I think everybody is.
Yeah.
But, and I'm not just saying this because I really don't exaggerate anything. I did say that this was a likelihood. And, you know, I think that there is a chance that we're going to get a lot of deals over the next couple of weeks. I think China's going to be isolated. I think it's all going to work out because at the very end, no matter who you voted for, no matter what your opinions are on our elected officials, the one thing that people should be able to say with certainty is if Kamala had won, she would not want to lose the House and the Senate in 2 years. And the current president does not want to lose the Senate in the next 2 years. So this is something that could not bleed over for months on end. This is something that needed to be swift. Now, a couple of weeks of pain isn't the worst thing in the world. But if this had carried on into the summer and then got even more exaggerated, it would have been handing the upcoming midterms on a silver platter to the other side. So I tried to look at all things and I didn't get too freaked out. I felt bad at the time for people who had just retired and people who were going into retirement because it was probably an uneasy feeling for them. But as I said to you, for long-term investors that are buying every 2 weeks, this is going to end up being a nothing burger the same way the yen carry trade was.
Okay, so now we're left with a couple issues. The first issue, and I don't know if you have an answer to this, but the bond yields are still spiking. I mean, what does the Trump administration do about that?
Let's see where they settle out.
We have until the summer for them to come down before we refinance. We're at 4.3 right now. Look, if stocks go up, it's not easy to get bond yields to come down. Right? People are going to sell their bonds to buy stocks. So do they make every country buy a couple $1 billion worth of bonds in the negotiations? Maybe that's the strategy. I don't think they're going to, quote unquote, tank the market again to get yields to come down, because even if we believe that theory is stupid, they tried it and it didn't work. They took out $6 trillion from the stock market and bond yields went up. So I think
bond yields were coming down and then they started going up again. I mean, look, I think that what needs to happen, I'm not saying this is going to happen, but what needs to happen is an off the record, behind closed doors that never gets leaked and nobody ever finds out about, with the Fed board and the president. And what needs to be said is, guys, we had no landing. You did an amazing job. You faced tremendous criticism from all angles about being too late, about being too early, but you did what was needed to do and got us through it. We are in a different time now, and threading the needle between price stability and maximum employment is not going to get the job done anymore. And there's too much debt coming due on a national level
but Steve, it feels like that's a fantasy. There's no way Trump can.
I am just saying that is what needs to be done, because he has to talk to the Fed in a way that makes them heroes, but also gets the point across that it's not just on a national level. But if we do not get rates lower in time for the corporate debt that is terming, all that debt was taken out at rock bottom rates. And if they're forced to refi with rates where they are, we will trigger a recession because margins will compress, because it will cost significantly more to service the debt, and that will cause a lot of jobs to be lost, and it will go against one of the two ideologies of the Fed. And at this point, maximum employment is more important than getting price stability down to 2%. And he's got to go in it with that exact mindset.
I agree. I don't disagree. Last question for you, Steve. Then we'll get over to Trump, guys. He's done with the executive orders. He's now taking questions. Steve, if you want to stay on to just listen to that, then you can. Yeah. Okay. So last question for you, then we'll listen to that. What is the game plan now? So we got negotiations with tariffs. We got China that we put another 124% on. Is the idea just keep jobs up, get inflation down, get the deals done, and then companies have good earnings and 7,000 S&P, there's a shot for that in a couple of years?
Well, I think inflation is going to continue to come down. Where's oil at right now? Is it
62.
still under? Okay,
60.
so oil's under 65. As long as oil is between 55 and 65, you're in a really good spot because the refiners are still going to make money. The upstream producers are still going to make money because they have break-even points. And Matt's the better person to ask, but a lot of things I've read are between 35 to 40 a barrel is their break-even points. Very few companies, to my knowledge, have low 30s on break-evens. And then input cost for manufacturing is tremendously lower. I mean, remember, last year, you had oil between 80 and 90 for a significant amount of time. This is going to make transportation costs go down. This is going to really help bring inflation down. Oil's always been a big component of it because it touches so many different things. I really do think that it is going to be a shock when we see what some of these inflation numbers are in the next couple of months. As far as what needs to happen with all these deals with the tariffs, I think that he's going to claim a big win. I think that they knew what they were doing the whole time. They made it look like they were crazy because sometimes that's what you have to do. And
Hold on. Do you actually believe, because Kris had the opposite opinion, do you believe that he made it seem like he was crazy to cause so much kerfuffle to then be able to get these deals? And do you give him credit for that? Or do you think it was a bunch of bullshit that he actually caused all this pain for no reason?
I think it's a mixture of everything. I think that they are acting like they're crazy and wild cards, so they remain unpredictable. I also think that the algorithm they used was incorrect to establish their numbers. And I think it was a mixture of everything. Some of it planned, some of it unplanned. I don't think they can take credit for everything that happened. We're not out of the woods yet, though. They still got to make the deals. The facts of the matter are you have a lot of countries wanting to make deals. Trump's going to claim small victories. It may not be crazy amounts of tariffs. There'll be more than what we had. Probably have a little bit of a better trade balance. And China's the wild card. I mean, you got some people like Kevin O'Leary calling for 400% tariffs on China. I mean, if he really wants to do that or increase it more, he's got to get our allies to go in it with him. He can't do it alone. And for once and for all, deal with China. But at the same time, I think that we're going to be in a much better place in the next couple of months. And people were freaking out over a day, over 2 days, over 3 days. I mean, remember, they went into effect. Tomorrow will be exactly 1 week. It's really hard to take anything seriously for a week.
Yeah.
Got to give people time to work.
Yeah.
And it looks like things are going to turn the corner. And I'm really not worried. I'm like I put in that text. And that was on day one of this. I am much more concerned about what everybody is going to say on the earnings calls. And what just happened is probably going to change the tone of the earnings calls for the better. And we're probably not going to get revised guidance downward. Maybe we don't hit 7,000 on the S&P this year, But I think the story for 64 to 6,800 is still intact.
I agree. It's there. If Nvidia can keep doing what they're like, if we can get a rotation back to the Max 7, we have a real shot.
Because what changes? Like, what really changes in corporate earnings at this point? Nothing really.
It's a good point.
Everybody just needs to cool out, let the dividends reinvest, and just let our elected officials do what they need to do. If they can't get it done in 6 months from now, start worrying. A week is not enough time. And look, they're working around the clock on this. This is also something where you got to take ego into it. Trump's got an ego. We all know this. Now, some people I've talked to thinks he truly doesn't care. My opinion, I don't know the guy. My opinion is very simple. I don't think he wants to be remembered as somebody who destroyed the economy, who destroyed the market. I think he wants to be remembered as a certain type of president. And I think that he is going to do what he needs to do to make deals, claim victories, and have a booming market. Otherwise, he runs the risk of too many bad things happening. And if the other side gets control of the Senate and Congress, there's a chance they impeach him and all these other things. So I just don't think anybody's letting that happen without putting their best foot forward. And I think we're going to be all right.
All right, let's listen to Trump take some questions. He will probably be talking about the decision he made today. Before we do that, Chris or Steve, someone just sent a super chat, $50 to say we love Steve.
No, they didn't.
No, they did. It's on the screen right now. Warren Wang from Taiwan sent a $50 super chat. He said, "We love Steve" with 2 exclamation points and 2 kissy faces.
Wow, that's incredible.
Telling you, people love you, bro.
That's incredible.
Well, I'm gonna have to use that 50 to get you some medium well steak. Peter,
no, absolutely not. When you come to the city, it's on me.
All right, here's Trump speaking on the tariffs today.
Deal in the UK, they do not have deficits with the US. They have a surplus. They do not have a surplus. They have a deficit with the US. So what is the criteria? And also, would you consider talking or meeting with Xi Jinping?
No, sure. He's a friend of mine. I like him. President Xi, I like him. I respect him. But they haven't treated our country right. Sure, I've met with him. On the other countries, we have Japan is here, and South Korea is here, and others are here. And we're trying to see him. It's from what I hear, it's much more than 75. I said 75 plus.
So many.
It's everybody wants to make a deal, actually. And we want to do what's right for our country. We also want the world. They get it. Our country is very strong. We were left a very, very weakened country, both economically, financially, because of all of the tariffs and all of the other companies just raiding us and ripping us off. And also at the border, where 21 million people were allowed to come in. Many of those people were criminals. And but the people that do this for a living, and some of them are very smart and some of them aren't smart at all. But these guys are very smart, and my group is very smart. My whole group is smart. And you've done so amazing on the border. I read the other day that there were 9 people and hundreds of thousands 2 years ago with Biden, and we had 9. We had it down to 9, and they were all let in for medical reasons. They were in bad shape. We let them in for medical reasons, not even for anything else. So you've been amazing. But that's a big thing. I think it's one of the greatest problems that I've never seen anything like it. Open borders. The whole world was emptied out. Prisons from all over the world, from the Congo in Africa, from Africa to Asia, a lot in South America, but it wasn't just South America. Prisons emptied out. And I said it outside with the drivers before, but El Salvador has been amazing, a job that the president's done. He's coming to see me next week, and we look forward to that. But that's really been amazing. Yes.
Mr. President, the EU also announced increases in tariffs today. Why not treat
bad timing for them? That's bad timing.
Why not?
They didn't put them in. No, they threatened them, but they picked a later date, which our expectation is it's going to be later still.
Okay, I'm glad that they held back.
You said you were watching the market.
this was the strategy all along to bring them to the table, why did you instruct or advise, or maybe they did it on their own, some of your top aides to say this is not a negotiation, to hold the line, that they were going to hold the line, that you were not going to change your mind?
A lot of times it's not a negotiation until it is. And that happens. And, I said outside that you have to have flexibility to do it right. And that's what we have. We brought everybody to the table. And it may not be a negotiation. It may not last. I mean, things may be asked that I think are not fair to us. Look, we've been ripped.
That's the scary part. The administration paused for 90 days and says, hey, we're going to negotiate. If the negotiations go bad, we can easily see the market be like, okay, we're not getting deals. This is not going to be good, yada, yada. I'm assuming the negotiations are going to be productive. That's the whole reason we're doing this delay. But obviously, if they're not, that could be an issue.
Off by essentially everybody for 35 years. This is not just a new thing. And Roger Penske just left. He's a great gentleman, great man, actually. And he said no other president would have had the guts to do this. And I believe that's right. They wouldn't have done it. They should have done this a long time ago. A long time ago, they should have done it. I started it with China. I took in hundreds of billions of dollars in tariffs and taxes from China in my first term. And we had the greatest economy. We were up 88% on the stock market. That was the greatest ever in the history of our country. But it had to be done. It's something that had to be done.
Mr. President, thank you so much. Which countries will be negotiating first? Do you have any criteria? Because, for example, Brazil and the UK, they do not have deficits with the US. They have a surplus. They do not have a surplus. They have deficits with the US. So what is the criteria? And also, would you consider talking or meeting with Xi Jinping?
No, sure. I would. He's a friend of mine. I like him. President Xi, I like him. I respect him. But they haven't treated our country right. Sure, I'd meet with him. On the other countries, we have Japan is here, and South Korea is here, and others are here, and we're trying to see them. It's from what
Are you playing this again?
75. I said 75 plus.
So many.
It's everybody wants to make a deal, actually, and we want to do what's right for our country. We also want to do what's right for the world.
Oh, this was a replay. Okay, so that's weird. I thought we already heard. Let me fast forward this.
It's incredible. I don't think we've ever seen anything like it. $7 trillion, and it's much more than that because these are places that we know. $7 trillion is unheard of. I never looked at the Biden numbers, but you could go a whole year, and it was peanuts. Everybody was leaving. They weren't coming in. They were leaving, and that means jobs are leaving. And so we're not playing games. We're going to make this country greater than ever before. Thank you for that question.
Mr. President, it seems that China's made some. Oh, yeah, absolutely.
Thanks. For the past few days, we've heard from this administration no pause. Was this idea of doing a pause, did that just come about this morning? Can you tell us exactly what came into consideration for you and your advisors?
For a period of time, I wouldn't say this morning. Over the last few days, I've been thinking about it. I've been dealing with Scott, with Howard, with some other people that are very professional. And I think it probably came together fairly early this morning. Just wrote it up. We didn't have the use of, we didn't have access to lawyers, or we just wrote up.
So Trump is saying the tariffs started, or they got the idea for it really in the past couple of days, the concept of the pause. And maybe, again, that's because Bessent put the pressure based on what happened in the market.
And it just goes to show you that anything can happen and things can change so quickly.
Yep.
If you caught what he said, they didn't have access to lawyers and it just kind of came together this morning. This can all change. And that's what I've been saying.
Yeah, no, 100%. And it seems like Bessent got his way, and that's what made the news this morning.
From our hearts, right? It was written from the heart. And I think it was well written too, but it was written from the heart. It was written as something that I think was very positive for the world and for us. And we don't want to hurt countries that don't need to be hurt. And they all want to negotiate. The only problem is, you can only do so many at one time. We want to do it right. We want to get it right. We want to take care of them, but we have to take care of our country. So, but this was something certainly we've been talking about for a period of time. And we decided to pull the trigger, and we did it today, and we're happy about it. I didn't know it would have that kind of an impact, but it's, I think they have the biggest increase in the history of the stock market. That's pretty good.
There you go, Steve. He's taking credit for the biggest intraday move in the stock market. I think on the S&P, it's like top 5 days. NASDAQ is the second biggest day, but there you go. He's taking credit.
You're almost, if you keep going, you're going to be back to where it was 4 weeks ago. But it was a sick market 4 weeks ago, because the trade was sick. It was only a question of time. I don't blame the tariffs. I think the tariffs just sort of magnified what was happening. It was sick. Biden allowed these people to get away with murder. Biden allowed China to just take advantage of us. We had like $1 trillion deficit with China, $1 trillion deficit. So that was going to only be a matter of time. I think the tariffs brought it out faster and they magnified the problem. But I think this was a problem that existed far beyond tariffs. This was a systemic problem, and we're going to cure that problem. And maybe to a large extent we have, because we've revealed it, and we've revealed it very strongly. Yes, sir, please.
Thank you, Mr. President. So it seems China's made some serious missteps here in these negotiations, and Secretary Bessent said earlier you may have goaded them into a tough position here. I'm wondering, are you in a way putting together a coalition against China in terms of trade here?
No. Well, China, look, they're very capable, and I don't blame China for what happened. I blame the people sitting right at this desk, right behind this desk, or another desk. You get your choice of 7. I happen to pick the Resolute, but I blame the people sitting behind in this chair or behind this desk for being stupid, incompetent, or not having courage. This should have been done years ago. This should have been done before Obama, in all fairness. Not only Biden, Obama. It should have been done many years ago. This started with the World Trade Organization, which was owned by China. It was owned and paid for by China. They didn't even have to do things. They considered them a nation that was undeveloped. They said they were developing.
All right, I'm going to pause that there. Steve, before I get your thoughts on all this, we have Lutnick on CNBC. Let's see what he has to say about these tariffs as well.
He joins us live from the White House right now. Mr. Secretary, great to have you with us.
What a great day for America, isn't it?
It is a great day. If you take a look, though, at the pre-Liberation Day close on the S&P 500, we're still lower from where we were then. And we did suffer, not only declines in the equity markets, but also, some crazy moves in the fixed income markets. Did the market reaction cause the administration to rethink its tariff plan?
Absolutely not. Absolutely not. The tariff plan for the president, look, he's trying.
Who agrees? Are you buying it? Put a 1 in the chat if you agree. It wasn't the market that caused them to do this. Put a 2 if you disagree. Who agrees or disagrees that they did not look at the market to make this 90-day pause decision?
Trying to fix the fundamental trade imbalances that have been going on for this country for 35 years. I mean, we were just in the Oval Office, and he said, I don't blame China. I blame the people who sat behind the desk in the Oval Office for letting this occur. It is time to take back the ability to trade with America, and Donald Trump is leading the charge to do that.
We understand that. That certainly has been the administration's thesis this whole time, Howard. But at the same time, we had Wall Street, your former compatriots, come out raising the odds for recession, lowering price targets across the board. There wasn't any element of that feedback that entered the thinking, because some would posit that if Mr. Trump and the administration actually listened to Wall Street and took a look at the reaction of the financial markets, the global markets for that matter, they would find solace in what the administration is doing.
Look, President Trump made it clear that he's got to reset trade. He's got allies and foes, both friends and foes. So what happened is we have so many countries who want to do deals with us. It's just not possible to talk to all, over 75 countries coming in who want to redo trade, who are taking a good hard look at their trading, their rules, their non-tariff trade barriers, their tariffs, their subsidies, their currency manipulation. They're finally willing to say, we'll make a better deal with the United States of America. Can we just have the time to do it? And the president listened to them. And of course, China took the exact opposite path. And you see what's happening. So if China's going to take that opposite path, the president's going the other direction. But for all those countries who wanted to work it out with the United States and make sure they create a fair trading model for the United States, President Trump was ready and willing to sit down with them and make a deal with them. And that's the position we're in now.
According to reports, you met with the various bank CEOs over the past couple of days, and they all expressed their reservations about how the policy was playing out and the impact on the markets. I'm curious because you've worn that hat as well not too long ago, Howard. And would you think that a 90-day pause would cause businesses to then resume spending, resume deals, resume their activity as they had planned to do at the beginning of the year? I mean, is that enough to sort of spur them to get back on track?
I think it is clear. People want to come and build factories and reshore their production in America. That's why the president talks about the huge commitment of building in America. So the companies are going to come back to America. The fact is, these countries understand that it was time to rethink the way they trade with America,
But I'm talking about
the way
US
they trade with
businesses,
China.
U.S.
Oh, they're
businesses
going to
just
build-
doing business here, in terms of, for instance, Walmart pulling its guidance. I mean, what will give, do you think a 90-day pause is going to give companies enough confidence to actually give guidance, to be secure in how they're planning for their businesses for the year, headcounts, CapEx, et cetera?
I think it's important for companies to understand that the countries that they do their business in matter. If you do business in China or you do business with a country that basically is just a proxy for China, that you're going to have to deal with the fact that President Trump does not think we're being treated correctly. But if you're doing business in other countries, really understand the country you're doing business in, understand their relationship, and push them to make sure their relationship with the United States of America is fair and correct. And that will be good for business. So what you're going to see is the greatest set of announcements of companies going to build in America. And of course, they're going to build in America. That's what's happening. And you're going to feel it all across this great nation. People are going to build in America, and the job creation in America is going to be fantastic. You just have to let Donald Trump drive the car, drive the ship, drive the plane, however you want to call it. Donald Trump is in charge. He understands how to do this, and no one could do it better. And that's just what the market told you today. I understood they doubted it. I understood they were uncertain, but that's what you get. Never bet against Donald Trump.
Steve, your reaction to Lutnick's take?
Well, I was just thinking about something. I think I got paid my dividend in my retirement account on Monday, which is amazing because it was probably at the lows. So that's great. I think a lot of people are in that situation. What I find funny is you go back and you look at a lot of political commentary over the years. A lot of people have agreed that we need to do something with China, and a lot of people have talked very tough. Not many people have acted. So, I mean, he said he was going to do all this. The most amazing thing to me is, and it's not what Lutnick said, it's the fact that the market ran to all-time highs in February and didn't think that this was going to happen. That I still can't get over that, because all this was what the campaign was around.
Yeah, I just think the extent of how they implemented the tariffs is what scared the market. But you're right. I mean, a correction was likely. It's just the magnitude of it was.
And look, they did the right thing because, look, obviously they looked at the market and obviously they talked and they said, look, if we just come out with a 60 or a 90-day pause, the market's going to rip. The narrative is going to change. Nobody's going to flip sides. They're going to let us do our work, and we're still going to get all the deals done. So, yeah, they're paying attention to everything. Even if they say they're not, they are. They're taking their cues from what the narrative is, and they did the right thing. They did a pause. They're still going to do what they need to do. And just because they did a 90-day pause doesn't mean they're going to stop working or they're not going to be making deals. I mean, what was the alternative? Everything is in disarray, and they do the same thing they were going to do anyway. This was the smart move where they can still claim a victory. And that's
So
something else.
You agree with Lutnick that you just don't bet against Trump?
I think it's pretty hard to bet against him, given the fact that the guy has made it this far. It's hard to bet against him. How many people have bet against this guy and gotten it wrong? He's a survivor. Like, at the end of the day, whether you like him or not, the guy's a survivor.
Yeah, it's interesting because here's a tweet from 2014. Trump says, "Deals are my art form. Other people paint beautifully or write poetry. I like making deals, preferably big deals. That's how I get my kicks." I think the issue that people are having, and tell me if you think this is a well-warranted reason to be upset, is that if you're older and you're living on your retirement and you see all this self-inflicted drama for maybe no reason at the end of the day happening, do you have a right to be upset about that, or should you let Trump be Trump?
Yeah. I mean, look, anybody has the right to be upset when they see a lot of capital leave their account, okay? Obviously, anybody has the right to be upset about that. At the same time, Trump did not run on a platform of, I guess, hugs and kisses. He ran on a very tough platform, and this is what got elected. And to think that he wasn't going to do any of this, he outright told everybody what he was planning on doing. This was not a surprise. Now, how he went about it could certainly be a surprise. But the fact that he went about it, everybody knew what they were getting themselves into. So I'm still saying the market overreacted.
All right, Steve, last question for you right here. NASDAQ ending the day up 12%, up a little bit after hours, 0.39%. NVIDIA, where does she go? I mean, are we in a bull market finally? Will the street recognize it, or what do you think is going to happen with NVIDIA?
So I know Tanner came out with his fair value target. I don't know if I'm there with the number he has, but I will tell you that.
Wait, what's his target? I didn't see it. What's his target?
I'm pretty sure it's 200.
Okay.
It's either 180 or 200. I feel like it's 200.
I have 180, so okay.
I could be wrong. Maybe it's you 180, him 200. If you go on his YouTube channel, I think he just made a video about it because I saw it come through in my feed. But I think that this is a stock that should right now be at a minimum of 165. This is something that has had 2 blowout quarters, is down for no reason, has tremendous growth, and is trading at a deep discount. And even though Microsoft canceled a $1 billion data center in Ohio, they came out 5 days ago and said that their plans to spend $80 billion on CapEx this year remain unchanged. It's just one deal that they are looking to do something else with. So I think NVIDIA should be minimum 165. And I think that after this quarter, we could see a very big run past 165.
So to you, it's the same kind of argument with NVIDIA, which is the street understands it. They're not willing to give the premium yet, but eventually the growth will force them to give the premium.
I think they were giving it the premium on the perspective of what they could do. And when they got there, the numbers that they were putting up weren't as exciting on a triple-digit revenue increase.
Right.
And that's not the right way to look at things, in my opinion. You look at things on, wow, they may not be growing at triple digits, but they just added $40 billion year over year or something like that. And they're doing things that nobody has done from a financial set aspect. And their EPS is expected to go from up 50% this year. I mean, their net profits are supposed to go up 40 billion this year. It's just, it's very undervalued. And there's no reason to think that they're not putting up those numbers. I mean, Jensen continues to say that demand is more than what they can produce. They have new iterations of Blackwell coming out. Everybody's in a prisoner's conundrum. They have to spend, and they will spend.
Also, these reasoning models are 100x the compute. Like, I was using a deep search the other day on Grok. It took 12 minutes to give me an answer.
Can
But
you,
it gave me a
can
really
you
good
answer me something about Grok?
Yeah.
So I read and I signed up for Grok because I want big brain, but I haven't seen it yet. I saw that it was out or it was coming out. All I have is think mode and deep search. I want big brain mode.
I don't have big brain either. I have think and deep search. Yeah.
But think is incredible.
Dude, so I asked a question about a certain, I was looking up some financial data about how many shares certain insiders have in a company. And I was like, if I ask Google, I'm gonna have 17,000 websites. Most of them don't say the right. Let me just ask Grok. And I put it on deep search. It took 12 minutes, scoured every piece of news it could find, and it gave me the answer. And like eventually that 12 minutes will turn into 12 seconds, but it needs a lot more compute.
So you're asking it those types of questions. What do you think I was asking it?
I would imagine, well, I would think you're asking what variations of milk one can create to drink.
No, I asked it what were the best MLB, Major League Baseball bets to make tonight.
See, but that's even like that's where deep search matters, because if it can help you make a bet, you know.
I gotta tell you, some of the answers it gave me were pretty crazy. It was incredible.
Yeah, it gives a little disclaimer. This is not financial advice, but then it gives amazing financial advice. So.
Yeah. So yes, it was funny because I had asked it on think mode to build me a stock portfolio that can beat the S&P and give me the breakdown of how you would allocate a certain amount of money. And it gave me a probably 3 or 4 page analysis. And I sent it to my dad because he doesn't pay for Grok. And it was really incredible. And it just goes back to what I was saying about how I think there's a lot of jobs that are going to get displaced over the next 5 to 10 years. And I think AI is going to be the most transformational technology we say.
Steve, do you let's take the bull hat off right now. What's the bearish case after the tariffs get delayed? Like, how do you make a good bear argument right now?
I mean, I think it's fairly easy to make a bear argument that, you know, this doesn't change a thing. We're still going to have massive tariffs. It's going to cause inflation. The economy is going to be in disarray. Nobody's going to be able to avoid paying more for products. Onshoring is going to raise the cost 40 to 60%, if not triple digits on a percent. I think you could very easily make a bear case.
Yeah, I mean, if the job market falls out, that's a bear case. CPI, that's a big one tomorrow. If that comes in way hotter than expected, that's a bear case, right?
Yeah, and also you already have unemployment at 4.2. It's trending higher. If the Fed doesn't cut and it stays here and companies have to refinance debt at higher levels, you run the risk of recession, because eventually once you get to that 1% increase in unemployment, we've always, since the 50s, that's when we've had a recession. So I think there's a fairly easy way to make a bear case right now.
The probabilities for a May cut yesterday, 58%. Today, 14%. And I think Jay Powell's got to be loving this, because now he doesn't have the pressure to cut in May.
He's still got pressure, just not as much pressure.
Yeah, the pressure is in June. I mean, like the market's definitely expecting over 50% chance of cut. But in May, I mean, people were talking about an emergency rate cut if we continue to do what we're doing, right?
So, and I will say once again, because I'm not going back on anything I said, I think the Fed should cut by 50 bips in May. And I will continue to say that up until they don't, because I don't think they're going to. But I think they should cut 50 bips in May. It would not be an emergency cut. When they raised rates, there were 3 consecutive months where they took them higher by 75 bips. We are still going to be at a restrictive level compared to where we were historically over the past decade. Not over the past 4 decades, but you can't go by historical figures anymore. Things are much different when companies borrowed. The reason you can't go by historical is because historically rates were never this low. And companies or individuals were never borrowing debts at levels this low. And when they refied, it never really hurt as much as it is now. We are in a much different paradigm. And over the past decade, you've never had money this cheap before. And the Fed really has to take a step back and look at the amount of businesses that have to refi and where people are with their mortgages and where the housing market is and why the handcuffs are not coming off. It's because everybody is stuck in a mortgage that's 3%, 3.5%, and there's no incentive for them to trade up because the cost of capital is just too restrictive.
Are the next 4 years just going to be a bunch of random wipeouts and then 10%
I don't think so. I think, look, it's still the first 100 days. I mean, it honestly feels like he's been in office for 2 years already. He hasn't even been in office 3 full months.
Yeah.
I think about it, the 21st, he'll be in office 3 full months. So I think you got to give this guy a little bit of time to do the things he wanted to do. I think it's going to get better. I think that it's going to be choppy for a little bit, but I don't a repeat of what happened last week. No presidency has been like that.
Yeah, I mean, I could see us give up 5% from these levels, 7%, but to go back all the way to 480 on the S&P 4800, like it just feels like.
I mean, I thought we were going to hit 4,800 as a low, and then I started to agree that it could go lower. But 48 was always my number where I thought it would bottom. I don't even know where we bottomed, to be honest with you. It could have been lower, but I think a big problem in the market, and it's not a Democrat or Republican thing, it's not a Trump or Biden thing. I think it's a greed thing. I think the amount of leverage in the market is a problem. I really do, and I think that's part of why we had such volatility.
But that's not going away, especially if we get bullish again.
I'm not saying it's going away. I'm just saying that I think it is a structural problem of how much leverage is in the market. That's a personal opinion. And I think that creates additional levels of volatility that do not need to be there. Because when you start getting legs down, people get forced to sell to maintain account maintenance. And that causes additional volatility that wouldn't need to be there if they weren't on margin.
So I think I told you the stat yesterday. Maybe I didn't. In March, retail bought the dip to the tune of $40 billion. Hedge funds sold the dip, sold the I guess dead cat bounce at the fastest pace since 2010. Maybe retail ends up being smart money here.
It's funny how that happens, right?
I mean, because a lot of hedge funds that panicked over the past couple of days, retail consistently, based on this data, has now maybe some of retail sold in the past week, but at least in March when things were getting bad, people bought.
So I got something. How about the 3 words that I said to you at least several times in the past week? High frequency trading. That's not retail. High frequency trading is directly from hedge funds.
Yeah.
And I think that's part of the reason why we saw such a violent move. And it's a problem because all these people are trying to do is scalp to make money. That's it.
Yeah. It is literally trading within pennies of a penny to be able to make a profit. And when you have this much volatility, obviously things can be insane. Like SoFi did not deserve to be $8.50, but a lot of stocks didn't deserve to be where they were. And that happens, as you said.
And look, directly with SoFi, you know that I am one step away from becoming bearish on SoFi. Like, I think that's very clear. A lot of people are mad at me about that, but I call it like it is. I was very bullish. I was one of the original bulls. I became neutral. I haven't liked certain things about it. I'm not bearish. I'm kind of getting there, but I'm not bearish. But I did say, no matter how I feel about my investment case at the moment, SoFi did not deserve to be where it was.
Not at all.
For 2 reasons. They don't have any tariff risk. And 2, when the Fed starts cutting again, because they are projected to cut a minimum of 2 times this year, the amount of refinancing that is going to happen, I said this for the entire financial sector, I think they're going to thrive with lower rates because the refi market's going to be on fire. SoFi is going to do incredibly well because of the refi market. And they did not deserve to go down as much as they did. Sell off with the market is one thing, but the drastic retracement that they had was unwarranted.
No, I agree. And a lot of these names unwarranted. So now it comes down to earnings, which is as an investor, that's the
what you
one
want.
thing.
That's what
That's
you want.
Because
You want to make
if
your
you-
decisions off of earnings and what the companies are projecting for their guidance. And just goes back to everybody needs to take a beat, take a step back, look at the big picture. And if you're investing with money that you can't afford to lose, you shouldn't be investing. Investing is a long-term mindset, and there's a big difference between investing and trading. Traders, whether you're a day trader or a swing trader, is a much different set of capital than long-term investing. Long-term investing, you should not need that money for 5 to 10 years at a minimum. And you should be able to stomach volatility in the short term. And that's why I kept saying that I can stomach all this, because I have a long-term mindset. And what happens on a day-to-day basis, it doesn't impact me. Does it annoy me when I see the account? Sure. Does my wife call me and ask why we're down so much? Sure. But overall, it's a long-term play. And if you don't think that the markets are going to be higher in a year or 3 years from now, then maybe you should make different investments.
What did you say to her when she asked you about that?
Do you want the long or the short version?
The long version.
No, that's what I said to her. Do you want the long or the short version?
What did she say?
She said the short version, and I said uncertainty with tariffs.
And that's it? She didn't care after that?
She does no. I asked her if she wanted to see the text that I had sent you and Chris and Matt and Ken, and she said no.
Page essay. Yeah. No.
It was not. It was like freaking 400 words. Stop it. 500 words.
That's cool though, right? Because you're the one managing the family portfolio, right? I mean,
I wouldn't say that. She has some really incredible calls.
But she's not looking at it on a day-to-day basis.
No, well, she looks at her account on a day-to-day basis, but she doesn't do any research.
Gotcha.
Dude, she called Meta at the IPO, and I did not think it was a good investment.
And now you're still holding on to Meta.
Yeah, I mean, she let me just put it this way. She called Ford in 2009, I think, when it went to like $1.87. I mean, you talk about somebody who's got guts. My wife has guts. Like, she gets a lot of shit right.
But see, that's the thing, right? It's like at the end of the day, I think you are the definition of a long-term investor, which is that the fact that you're still holding Meta from IPO, if you don't need the money, you don't need to make some down payment, and you don't want to pay the capital gains, you let these companies be the best companies that they could be.
Yeah, I mean, I don't know what our average, because we added to it, but I mean, our first shares were at $19 a share that we still have, and we added to it over the years. But when Meta ran to like 3 or whatever it was, and then fell to 98 or 96 or wherever it was, I didn't get crazy. We talked about it on Finance Junkies. I mean, I wrote a very long article about why the market was incorrect. I mean, I never lost an ounce of sleep over it or anything. I mean, I looked at the numbers, looked at the product, looked at the growth, and said that every single thing that people have said is going to go wrong has never materialized, from Cambridge Analytica to every freaking lawsuit they had. It has never stopped people from using their products. And I kept saying that this is going to change. Same thing. Look at Altria Group. How many people thought Altria Group was going out of business? I mean,
no, but this is also the thing about earnings mattering, right? Because if you choose to allocate capital to Altria, Nvidia, Meta, whatever it is, the only thing you can do as an investor outside of paying attention to the macro is listen to the earnings call, look at the deck, and try to figure out, is the price you're paying today make sense for the earnings that you expect to see in the future? But if earnings don't matter because of this crazy macro tariff thing, then it's really hard for anyone to meaningfully allocate capital. And I think it's so important.
I'm very happy you just said that. I'm so proud of you.
Thank you. I appreciate it.
I am so proud of you, because you just said exactly what a lot of people have been saying. when you make an investment, you're paying the present value for the current levels of cash flow and all of the future profitability that company is going to generate. And I think we need to get back to that with investing, because too many people are speculative and not enough people are looking at that. And also, we have to remember, this isn't the same market it was 2 years ago or 5 years ago. Information moves at a second's pace. It is so quick. It's in your face all the time. You cannot expect to be able to comprehend every little thing that happens and make decisions off of every little news point, because it could change in the next 5 minutes.
And that's why actually valuing company earnings is really important to making investment decisions. But you need the ability to know that there's not going to be a trillion tariffs to deal with in Q2, which is what Trump made available today for the market.
Correct. I mean, should Alphabet have ever gone to 140, whatever? No.
Dude, it got to it got to 137.
I mean, Alphabet was trading at 13 times 2027 earnings. Alphabet. I mean, come on, what are we doing?
All right, so what are you eating for dinner? Because I would imagine, feeling a little bit today.
Yeah, I mean, the chicken parm was pretty good.
You had a chicken parm for lunch. Oh, I told everybody you had a Ferris Bueller's Day Off yesterday. So they know.
Sorry, I'm back. I hung up on somebody.
I know, because you love the chat. You love the chat more than all these phone calls. The fact that you're getting these many phone calls means people must be ecstatic about the markets right now.
Yeah, phone calls and texts. Oh, it's not just that; it's work stuff too that's going on. But yeah, my phone doesn't stop.
Yeah, we had a lot of people working from home today, basically saying they were quote unquote working, but realistically they were looking at the markets. And so I think with that 2 p.m. pivot, I mean, everyone was just like, wow, this is actually happening right now.
Yeah, it's going to be interesting to see if it holds tomorrow or if it sells. I wouldn't be surprised if you go down 3% tomorrow from here.
Me either.
And I think that would be healthy. But at the same time, I wouldn't be surprised if the Dow goes up 200 or 300 points and, it just kind of moderately ticks higher and stabilizes.
I still think the bond market is an issue. I still think we have to get deals. A lot of people are saying, what happens after 90 days? I don't know. My guess is that after 90 days, they'll be indefinitely extended to continue negotiating. But those are uncertainties that are real.
Before we start asking what happens after 90 days, let's start asking or saying this. Let's not really think about it for a month. Let's see what the narrative is in a month from now. And let's see what deals are published and where they say things are headed. Let's just not jump to conclusions. Let's see what they actually do, take a beat, and relax. Like right now, you just got a huge dam plugged, okay? Your ship was taking on water. The hole just got plugged. You have time to think, breathe, and relax. Let's see what type of work they do, and let's see what is announced over the next month, and then start thinking about it again. We know that they're going to be making deals. Let's see what materializes.
All right. Exciting day. Exciting day. Thank you, Steve. I appreciate your analysis here. I know a lot of people were curious about what you think. You've kept a level head through all of this. It could still get more volatile, but seems like it's in a better direction now.
Yeah, I mean, I think it's also easy because I'm not on margin.
Yeah, and you don't rely on any stock market gains for your livelihood.
So no, I don't.
Yeah.
So it's, I'm also not investing for my livelihood either. Like I'm not day trading. I'm not doing any of that stuff. So it's very easy for me to have a even keel mindset and be able to withstand pain. It's also perspective on things too.
Yeah, you've lived through a bunch of these before, so you've seen multi-day declines like this, and I'm assuming it's desensitized you a lot to it. The other thing that's important here is if we do rally for the next couple of days, let's say another, I would say 2 to 4%, the level of FOMO I think is going to be intense, because if people said, "Oh my God, I missed Hood at 32, Meta at 480, the Qs at 403, Nvidia at 85," I think money's going to start chasing.
I think you're correct, but you're correct in your narrative. I don't think you're correct on the time frame. I think the FOMO happened the last week of April because you get four big tech companies reporting. And I think if they come out with strong earnings and guidance, I think you're going to see tremendous FOMO.
Yeah.
Tremendous.
Yeah.
Because I think people are going to realize the AI narrative is real. These companies are going to continue to lead the market higher. And just like, look, the market did phenomenal under Biden. Okay. And I don't care what people don't like him. They're like, I don't care about politics. I don't care. The bottom line is, in the history books, when you look at the year-over-year increases, the market did very well under Biden. And I think when it's all said and done, the market will do very well under Trump. So I think now is still a good time to buy.
Yeah, and not only will the AI trade be proved real if the companies can execute again on earnings, but where else are you going to put your capital if the Fed cuts rates? 3% in a money market fund.
I keep saying that. Unless you have a business, unless you own your own personal business, you own a cleaning company or a janitorial company, whatever it is, restaurants, I don't know. Name your pick. What are you going to do? You're going to put your money in a CD? Like, sure, I have money in a CD, but that's for other reasons. Like, if you're looking
does the CD have good songs?
You know, your definition and my definition are probably different.
That was a good one. You got to admit, that was a good one.
It's probably different, but I just think, you know, if you're saving for something, and you need it short term, the market may not be the best vehicle. But if you are saving for retirement long term over 20, 30 years, I mean, I don't think you're buying bonds.
Do you know what a Betamax is?
A Betamax, yes, I do.
I didn't know it was a VHS competitor. I learned about that yesterday.
Oh, you weren't even born during that time.
Okay, but I used VHSs, just not Betamax.
Okay, but yes.
No, I agree. This is obviously very exciting. This pivot is exciting. I think we can give back a lot of these gains, but we don't have to go back to the absolute lows. So I think that's
you know, tomorrow's going to be interesting, to say the least. But I think it's going to be even keel at this point. They learned their lesson. They'll never get admitted, but they learned their lesson.
All right, Steve. Appreciate you. Thank you for joining the show. Again, the audience loves you. Steve's Twitter right here in the chat. You can get to his Seeking Alpha.
Oh, I wrote 2 articles today. I do think that 1OK and Diamondback Energy. If Matt's listening, look into Diamondback Energy.
Okay. We can probably explore this deeper on a Friday show.
Yeah,
1OK.
Yeah, 1OK is they acquired Magellan Pipeline a couple months ago. They have 60,000 miles of pipe. They had a 33% retracement during all this craziness, and it is in I think, a really good position going forward. And Diamondback looks very undervalued here.
All right. There you go. Steven Fiorillo, thank you. Enjoy the rest of your day. We will talk to you later this week.
All right. See you guys later.
See you later. Have a good one. What a day. What a freaking day, dude. Every day we've started the market close like an hour early. I feel like that just might be a trend, dude. Is every day there's just so much to cover. But this is wild. Like, it's actually wild. I have never seen in my lifetime, which is realistically the past 5 years of covering the markets, and really last 3.5 years of taking it seriously, a 12% swing on the Qs in one day. I haven't seen that. 407 to 466. I mean, it's just, it is quite now again, did we deserve to go there? Probably not. So the rip back feels amazing, but it also feels like it didn't deserve to go that low. But still, even with a rally to the upside, it always feels good, right? Like, it's just like all that money that was gone just comes back out of nowhere, right? Like it turns from paper losses to paper gains. And it's one of those things where I think the next couple of years are going to be pretty volatile. But if this was the biggest volatile event of the Trump administration, aka tariffs, and now it seems like we're going to get some deals done, then maybe we really can get back to thinking we're going to have a bull market this year. I'm going to be really curious what the analysts say, right? So every analyst that I look at on Wall Street, they cut their target to a minimum of 5,500, most of them from 65 back down to 52, because it's just hard to assume that we can have the earnings growth and multiples to justify further expansion. I wonder if they come out over the next couple of days and they tell their clients, nope, buy the market, we're going back to 6,500, 67. If we get a good CPI tomorrow, does that easily explode stocks and force me to roll my covered calls out for like a year if we actually explode that heavily on CPI? I mean, like, it could. And CPI could also be flat and the market could kind of sell off that news and it's not that big of a deal. But the point is, if the narrative is shifted, I wonder if Wall Street, which again, the reason their price targets matter is because they advise some of the biggest funds in the world that allocate capital. So if you're a fund that has 500 million under capital and you really care about what Bank of America says about the market, and Bank of America says, hey, you're probably not going to get more than 5,200, you might not buy stocks at an exciting rate or at a rate that even warrants a meaningful allocation of capital. But if Bank of America says, hey, we're going to 6,500 because like, yeah, the bull market's on, you start buying. And I just wonder what the institutional narrative is going to be. Retail looks like they're winning. I mean, I don't know how much of retail sold in the past couple of days, but in March, 40 billion, that's 10 billion higher than 2022's worst month, or 2022's best month, which was a bear market. So retail bought the dip in March. Maybe they bought it a little bit more than the absolute lows in the past couple of days that we've seen in April. But retail has said we are going to continue to believe in this market. A good CPI, I think I didn't see the projections yet, but I'm pretty sure 2.7 would be like what people care about. Let me check what the projections are. Tomorrow we should get it at 8:30. That means I'll be live at 8:20. Oh no, the market wants 2.6. The market wants 2.6. Okay, so if we can come in at 2.6 or 2.5, that would be really good. That'd be really good. Consensus is 2.6, forecast is 2.5. So realistically, the expectation is 2.5. So yeah, technically we got to come in at 2.5. Month over month, the market's expecting 0.1%, year over year on the core 3%, and then month over month on the core 0.3%. If we get 2.5, if we get 2.4, which, I mean, look, I think it's a low probability, but oil was down a lot last month. Is there a world where shelter and oil lead the downside on inflation? Yeah, there is. And does that make it really easy to justify tariff inflation? Yeah, because then you've got all these other counteracting the tariff inflation, and then you've got Jay Powell with the ability to actually make a cut. It seems like there's potential there. 62% of you in the poll said that this is not a dead cat bounce. Here's the last question for the day. Do you think we continue the green tomorrow? Which means, do you think we close green 2 days in a row? That is the question. Do you think we close green 2 days in a row? I think pretty much all of you guys I'm seeing in the chat right here, we're buying over the past couple of days. I think very few of you sat out and didn't deploy anything. And I know it was scary to buy, but I think everyone here kind of like dabbled in it. Maybe it wasn't like August 5th type of, okay, let me just get whatever I have and put it in the market because this whole yen carry trade is stupid. This one felt a lot more real. But it does feel like, based on these comments, a lot of people took advantage of that dip, which is the opposite of the suits, dude. It's the opposite of the hedge funds. It's the opposite of the Wall Street analysts. I mean, all of the advice over the past couple of days was go out of the market, which again, I don't even blame them for saying that because the tariffs really did feel that bad. But nonetheless, it does seem like retail bought this dip. JS says, nope, I wasn't making the same mistake I did in 2022, 2023. I was ready to deploy. Yeah, there you go. I mean, could these have stocks gotten lower? But like again, everyone has their own stock and their own levels, but grab at 340 to me was insanity. And at some point, if you're deep into a stock and you believe in it and you understand the vision and you see a price that feels like insanity, which tends to be at least 10% down on the day, you nibble at that. like you nibble. You just like those opportunities, they don't come that often. And I think that's the biggest thing I've learned in the stock market as well. And you get humbled every time you have one of these downturns, which is that the market's liquidity, which is deep, we're talking about tens of trillions of dollars of liquidity. And that's just on the equity side. There's hundreds of trillions in the bonds and all this other stuff. It can move instantaneously if there is a narrative that is positive. And if you're in the right company, a good macro narrative with decent earnings, which is why earnings matter so much, yeah, it tends to pay to let that compound over time versus try to time it. It's just really, really, really hard to try to time it. Austin says, Amit, I took out a $45,000 credit cash advance at 0% to deploy into the market. All right, so that's a little risky, but this is some of the stuff that that really ends up building wealth, right? If you can get 0% capital and then deploy it effectively, aka realistically, you should have been able to buy anything over the past couple of days, and you should be up on that. And you're only paying 0% on the interest. I mean, that's better than the lowest of margin rates at 5.5%. Obviously, that's risky, and that's something that you have to really build up your own tolerance to be able to do. But I think a decent chunk of retail said, let me find whatever cash I can and try to put money into the market. Where did you get it from 0% though? Was it like a credit card that was giving you 0%? Because Bank of America, they do this, and they'll give you, but I've heard the most they can give is like 20,000. It's usually 1,000 a month. It's like 12,000 at 0%. So I'm curious who gave you 0%, but yeah, if you got it at 0 and we're able to buy at the bottoms, dude, like those are, I mean, this is the whole thing. People talk about refinancing their house to buy the dip, selling their kidney. All this is a metaphor for just like, how can I find capital and deploy? And again, I think we'll give back some of these gains. I don't think we're going to keep all of them, but I don't think we're going back to 4,800. I'll say that Sunday, I do think fell's more bottomy than not, unless the tariff narrative changes. But hopefully it doesn't. I was buying with a credit card as well, but with 5.5%. Yeah, most of them do, if you're in a really good situation, like less than 10% on the interest. Bank of America does 0%, but that's capped, I believe, at like 18,000. Again, if you did that at the beginning of January or at the top of February, it sucks because now you're down on that capital and you have to pay the interest. But if you're doing it when prices get this low, even if it could go lower, it's just one of those things that might end up working out in the long term. All right. I think that's it. Exciting day. What did you guys say in the poll? 70% of you say yes, we continue the green tomorrow. Yeah, maybe this is just the euphoria today, but I would say yes too. I mean, like, granted, could we get a technical sell-off? Sure, right? Like absolutely. I mean, realistically, we should probably give back some of these gains, but if the momentum is strong, like strong on the narrative shifting, maybe we hold up the green. However, given this Trump administration, I also think one thing we all have to recognize is that there probably will be some new thing that happens that has nothing to do with tariffs that is also very volatile, maybe not as volatile as tariffs, but it will be something that, people get scared about and causes fear in the markets. Robinhood right here, up 0.5% after hours. Already some of these stocks losing a little bit of steam. The Q's down 0.3, Tesla down 2% after hours, S&P down 1%, Nvidia down 2%. But it does feel like a lot of these can hold on to the majority of the gains that they had today. China will retaliate. I think that, the China thing is the thing I'm least worried about. The China, again, this is becoming a comedy, right? The US says 104%. The China says 184%. Then the US says 125%. China's probably going to go to 150% soon. I mean, this is just, at some point, it's two toddlers, just smacking each other back and forth. It's not real. These numbers make Apple's not going to be doing business with 105% tariffs. There's going to have to be some level of negotiation. I think Trump just doesn't want to blink first. He already blinked for the market. And so he's waiting on Xi Jinping to do that. Maybe it happens, maybe it doesn't. But I think, I don't know. I just personally feel we're going to get a resolution to that, hopefully within the next month. He did just comment on the TikTok deal, which might be important in negotiations. So here's what Trump said just now about about TikTok, which again might be used in the China negotiations.
Where does the TikTok deal stand? Given
Well, it's moving along, but obviously, I would say right now China's not exactly thrilled about signing it. We have a deal with some very good people, some very rich companies that would do a great job with it. But we're going to have to wait to see what's going to happen with China. So,
Mr. President,
no, it's on the table very much. I think China's going to want to do it, actually.
I mean, even the way he's talking, right? It kind of feels like, all right, like I think they're closer than not to getting some progress there. It might take some time, but it definitely does. It doesn't feel like China will be the end all be all to this bull market now that the tariffs are officially gone. Trump already talked about the Apple stuff. So he mentioned in that press conference as well, Apple's coming in for $550 billion. I wouldn't be surprised to see an Apple exemption anytime soon if we don't get a China deal within the next 60 days. I think Trump's not going to screw over Tim Cook. I think he recognizes how important it is for Apple to be Apple. And so I do think there is a world where Apple survives even if we don't get a deal. Apple right here, monster day, up 15%, back to being a $3 trillion company. Microsoft is 2.9 trillion. So Apple still is the most valuable company in the world. NVIDIA right here at 2.79 trillion. And then Google at 1.93. So Apple reclaiming that top spot in the market. Did Bill Ackman just post? Oh, yeah. So Bill Ackman, I did see his post. Now, Bill Ackman, this was kind of funny, okay? So people have been dogging on Bill Ackman because he's been such a staunch supporter of Trump, like, one of the biggest business supporters of Trump. And then for the past basically 72 hours, he's been saying Trump is executing horribly when it comes to tariffs. And he's been very vocal about how upset he is. Here's his tweet. This was a brilliantly executed deal by Donald Trump. Textbook, art of the deal. Dude, everything can switch on a dime. On a freaking dime, dude. This guy was writing essays for the past 2 days about how Trump is just doing a horrible job with negotiating. Nope, art of the deal. See, realistically, if it was art of the deal, or if Bill Ackman thinks it was art of the deal, he wouldn't have been complaining for the past couple of days. He would have just let it play out. But he got emotional, obviously, because he has billions of dollars in the market. He's seeing hundreds of millions of dollars of losses. I mean, that can definitely keep you up at night. But it seems like getting rid of the tariff volatility, it changes that narrative. And it changes that narrative aggressively. He probably made $500 million in one day. He can write one tweet. Where is Nike today? Well, we can calculate how much he made on Nike alone. Nike went up. Okay, so he has, if I do the math, he made $120 million on Nike. And on Google, he made $58 million on Google. So between Nike and Google, on Uber, so that's $200 million between Nike and Google. On Uber today, he made $25 million. So I'm just taking the number of, these are rough numbers, the number of dollars the stock went up times the number of shares he has. Yeah, so you're looking at about $250 million within 3 stocks. He's probably a little happy today. Probably a little happy. Dude, Buddha's been back there playing with the Rubik's Cube for ages and still hasn't figured it out yet. Dude, you guys keep commenting on that Rubik's Cube. I haven't even I don't know. There's not even a good Rubik's Cube. It's one of the old ones. So it's not like, it doesn't move as well. No, I don't know. The Rubik's Cube just sits there in the back, always unsolved, because we're trying to solve the mystery of the stock market every day instead. So it stays unsolved. I need to learn how to solve it one day though. But my life is based on covering Trump every time he goes live. So that makes it hard. Do I get a manicure today, guys? Do I officially get it done? I'm not going to do Saratoga, but I think it's time to get the manicure. Or is that too much? Are we rich enough again to get the manicure? Or is that stretching it? Is that stretching it? Go for it. Gay. Dude, I told you guys, right? So for those that didn't hear, when I was with at the Robin event, Stephanie Guild, who's like their head of macro research, she saw my nails and she was like, "Do you get manicures?" And I was like, "Yeah." She's like, "Oh, me and my son get manicures all the time." That was great. That was the best part of the event, dude. That was the best part of the event. By the way, speaking of Robinhood, Vlad tweeted, and he's pretty damn happy. I mean, Vlad's personal net worth is probably up, like 50, 60 billion today. So Vlad said, yep, just like that. Again, on Saturday, he tweeted, one great thing about tariffs, they can be modified or removed as quickly as they were introduced. And he says, just like that here, as the tariffs start to go away. Do you think Tesla will hit 300 by Friday? I don't know, dude. Tesla, the problem with their earnings is that I don't think they're going to be good. So it could if momentum is heavy. But I think February we did have a bit of a crazy market. That has died down. As a result of it dying down, I think we have a less crazier market, even though we're going to get a ton of FOMO and money coming back in because people are going to assume it's a bull market. But I would hope it doesn't get absolutely insane like it was in February, because it doesn't need to. And if it does, I think it's just going to lead to more disappointment because inevitably it's going to come back down. So I think slow and steady wins the race, as long as people believe that the race is winnable in the first place. And Trump's tariff announcement today was needed to make people feel like the race is winnable. Need to go back to Shirley Temples? Yes, we need to get some Shirley Temples, dude. We need to celebrate today, dude. But if it doesn't feel like we should be celebrating because we're just getting back to where we were a couple weeks ago. But it really did feel like the end of the world the past couple of days, right? Like I know Steve says I don't care, but even at some point he was probably feeling like this is not good. This is just like it sucks. Not only the volatility. I think the thing I kept saying over the past couple of days is that it's not that stocks are down. It's the reason they're down. Everyone felt like this whole trade war stuff is useless. It's pointless. It's not necessary. And the stock market is suffering as a result of whatever Trump wants to do. And I think that's why people were upset, because it just felt so horrible. And I don't think this calls for a celebration, but it definitely calls for, okay, the worst case scenario maybe is not the worst case scenario anymore. Which is why I think the markets are doing what they're doing right now. Jason O'Neill says I'm already drunk. Oh boy. I was crying last night, dude. Like so much changes in 24 hours. So much. And again, I really think we should not be afraid if we see a lot of these gains go away. I just don't think we're going right back to the lows that we were at a couple of days. Like this type of velocity and move to the upside towards the end of the day, it feels like a pivot. It doesn't feel like a dead cat bounce. That dead cat bounce from 548 to 570 took a good 2 weeks from March 13th till the end of March to really develop. This thing happened in a day. 50 points on the S&P in a day. I mean, not even in a day, in 3 hours, or 2 hours, because it was announced at the end of the day, the pivot on tariffs. Doug said it got so bad I had gone 3 days without watching the show. Yeah, I mean, I think the market open, market close to me has become more important on days when it gets so bad, because I don't have all the answers. Kris doesn't have all the answers. Steve doesn't have all the answers, but everyone wants some level of just analysis on what's happening. And I think that's that uniquely when everything's bad is important. But we might have a shot to save this bull market this year. I don't think it happens again in 90 days. I don't. I'm going to be more optimistic here and say this 90-day buffer is just to be able to get to the next 90 days. And if the negotiations are going well, they'll do another 90 days. Like if Besant's the one leading this whole 10%, we're going to negotiate and get deals, I have enough faith in Besant and his team that the deals will get done. Besant doesn't seem like the confrontational type of guy that's going to like completely ignore any level of compromise on these negotiations. Lutnick and Peter Navarro, on the other hand, I think they would go that extreme, which is why they're not handling it. And so I think Besant gets the deals done. And hopefully that results in continued momentum and saving the bull market. It's so funny. In the market open, we were literally talking about, is this a bull market? And 70% of you said, no, we're in a bear market. But I think most of you guys agree that we could get back to that bull market if the tariffs go away. If those go away, we could be right back and save it. And it looks like, at least for now, that's how it's playing out. All right, cool. That's it for me. Thank you, everybody. I will be back tomorrow on the market open Thursday. It is going to be a very important market open. I'll be live 10 minutes early, 8:20 a.m. Eastern for CPI. That is going to be something that can really potentially take us higher if we come in, I would say, at that 2.5, 2.6 range, or it's something that if we're higher than expectations, which I really don't think is going to happen because of oil and shelter, then we could go much lower. But in general, this is going to determine Fed future rate probabilities. This is going to determine the tariff inflation paradigm in the context of overall interest rates. This is definitely going to have an impact on bond yields. So tomorrow morning is going to be a big market open. And the CPI report is definitely going to have an influence. And then we have earnings coming up pretty soon. On Friday, do we have earnings on Friday? You guys are all saying I'm going to stay another 15 minutes. I'm going to stay another hour. Just for you guys who are saying I'm going to keep staying just for another. At one point, it'll be like 7 hours. Like, all right, guys, 15 more minutes, which means 60 more minutes. On Friday, we have JP Morgan, Wells Fargo, Morgan Stanley, and BlackRock. Oh, today we had Delta. Hold on. We had Delta earnings today. How come I didn't know about this? No one wanted to tell me we had Delta earnings today. What were their numbers? Yeah, it says Wednesday in the morning. The stock was up because of the Trump stuff, but so they missed on revenue, very slight miss. They beat on EPS, 46 cents versus 39 cents. That's a nice beat by about 18%. And then revenue, 12.97 versus 12.98. The stock today was up 23%. Primarily because of the tariff pivot, but still. The S&P 500 right here, 544.29 after hours, down about 0.72%. All right, cool. Delta, not bad. That's barely a miss on revenue. I mean, that's nothing. EPS beat by 18%. That's great. If the other companies in the airlines can continue to show that type of growth and give some resemblance of guidance, not the worst thing in the world. All right, cool. That's it for me. Thank you, everybody. You don't have to go crazy celebrating today, but I do think you've been through a lot of emotional volatility, more than even financial volatility, every one of you guys, because you care about allocating your capital in the stock market over the past couple of days. And so, yeah, I would say take some time off of caring about the market, go get some good food, spend some time with family. Like, it's not really a celebration, more so of a fact of, hey, I'm an investor. I deal with the really shitty days, and I keep dealing with them to deal with these types of days. And I think everyone should at least enjoy today a little bit, because we get to play the game again tomorrow. Tomorrow, the game might feel rigged, even though right now the game feels like it's rigged to the upside. But these are the days that we do it for. These are the days that we do it for. Mocktails for everyone. Exactly. When we do the Toronto meetup, we got to get a place where there's mocktails. We got to get a place where there's mocktails. I think by Saturday, I'll have the details on the Toronto meetup. So stay tight for that. It'll be on Twitter. It'll be on YouTube. I'll put the Google form, and we should be getting it done. Again, I was looking at flights yesterday, relatively cheap. So most likely that last April weekend, we'll get this Toronto meetup happening as well. Money market funds tomorrow. We'll find out. We'll find out tomorrow. So, and that'll be interesting because tomorrow's numbers are going to include today's number. So last week we had an 11 billion decrease. I mean, tomorrow, if we have like an $80 billion decrease or something, then we know for a fact we had a lot of money leave. So by tomorrow, we'll have a better look on what's happening with money markets. Are you going to be late to the meetup too? No, I hope not. But I think Tanner might be there. So Tanner definitely might be a little bit late to the meetup. We should start betting on how long it'll take Amit to end the streams. I don't know what happens at the end, bro. It's like my mind or something. I'm like, all right, it's time to go. And then I think I see the questions. I think of another topic. And that's why it's easy to talk for 7 hours a day. But it's also hard to stop talking at some point. All right. That's it. Officially. We're done. Thank you, everybody. Love you all. See you guys in the morning. I'm going to go get some rest. You guys know I didn't sleep last night. I slept at like 3 a.m. I think everyone should get some rest. And let's get back here and play the game tomorrow morning. All right. Bye, everybody. Love you all. Have a good one. See you guys on the market open tomorrow. Bye, everyone.